So now the topic was, where is the bottom? This was suggested to me by a few of my friends who felt, the market seems to be going down every day, and people, especially in who are having small caps, began to lose money, and therefore they feel that when will this tragedy, or when will this horror show end? So I had done a spaces session just about on 3 days ago on Shivratri, where I talked about Tandav in the market, and I had expected that the Tandav will happen, and unfortunately for the market, it happened. I don't get any joy to see that people losing money. I too am an investor like you, been one for last 30 years, and I too have a portfolio. So one doesn't like to see losses. Though touch wood, my portfolio, which is basically ITC, has done well in the last 3-4 days. But whatever it may be, let's begin. So before we actually wonder where we are in the bottom, and at the end of my 25 to 30 minutes talk, I would like to explore where could the bottom be. While being an experienced guy in the market, I know it's difficult to identify tops and bottoms, but we can make a reasonable judgment as to where we are today, and if we go on this path, where could we have a bottom coming up. So there is nothing hard and fast. I know that. I can't say it will happen. I always say it will probably happen. There is a high probability because, as I said, nothing is certain in life excepting what is it? Death, taxes, and postponement of LIC IPO. Other than these three, nothing seems to be certain. So let's get to where we are today. Now, before we identify in what kind of a market we are, whether we are in a bull market or a bear market, if we are in a bear market, obviously we'll have to find past experiences as to when they have bottomed out. Now, the question is, are we in a bear market at all, or at least in a significant bearish phase? Now, people define bear market saying that India is a bull market, which I completely agree. For the last 31 years, in a secular bull market, yes. Then in that, we'll have something called cyclical bear markets. So let's assume that we are in a cyclical market. Now, whether that is cyclical is bull or bear, let's explore by looking at 7 different points. If you hear the gurus, or if you look at TV, or you look at any media, there is not a single guru or not a single strategist who's talking of a bear market. Not a single one, at least as far as I have seen, heard, discussed, none of them. Everyone is talking of this as a sideways market, or this is a bull market with a small correction. Now, correction is defined as something which falls by 10%. Bear market is defined between about 20%, and a super bear market is about 60%. So now let's look at how do we assess markets. So I had pointed this out in my spaces, which I'm quickly going to talk about it. I'm assuming that a lot of people did not attend it, where there's a completely different audience on Twitter. So one should look at economic indicators to know which phase we are in. Now, major economic indicators are GDP, IIP, inflation, taxation, collection, like GST. Now, if you simply look at it, you will know GDP has not done well, IIP is poor, inflation is increasing, though RBI says it's only about 6%, we all know it is much more than 6%. Taxes have been good. So that is one shining point in the economic indicators. Now, that's the second one is the corporate performance. Corporate performance has been good till the last quarter. In this quarter, that is quarter ending December, many of the companies have complained of margin pressure. Be it chemical companies, be it paint companies, be it FMCG, be it auto companies, across the board, you have for the first time begun to see margin pressure. Now, this margin pressure has happened because of inflation, which has become very sticky for a long time now. I've been warning about this since July, August, when the Fed Reserve talked of inflation being transitory, I said India at least is in a stagflationary environment. And stagflation basically means low growth, high inflation, high unemployment. And if you're observant of these major macro issues, you will know that our growth is falling. IAP is showing you that inflation numbers. You can actually go into the market and see, and then unemployment is very rampant. You hear about PhDs applying for peons posts in government organizations. So corporate performance has been good, but the first signs of worry are coming. And we're already into the third month of this quarter, and the commodity inflation is only increasing. So that will come, that will reflect in the quarter ending March, when the results of April, when the results are declared in April. And I'm certain that the corporates will complain that inflation has taken, a big toll on their margins. So that is as far as the negative is concerned. Now look at stock prices. If you tune into any of the business channels, they would say the markets are buoyant because the major stock prices have only fallen, major indices have fallen between 10 to 13%. So why is there anything to worry? It's after all only a correction. Now, if you look at our own portfolios, we will, hand on heart, we will understand and we will have to confess that our portfolios are battered between 25, 30, 40, 50%. So the, the market is suffering. The indices have not yet suffered. Look at institutional activity. For every rupee which FIs have sold, and they've been selling consistently from April, DIIs and the retailers have been buying. So the argument is FIs can sell what they want to, but we are here as Robinhood investors. We have the money power and we have the DIIs as our ally. So we can absorb their sales. Now, if you see in the last 2 3 days, FI sales have increased dramatically. Especially today, it has gone to 7,000 crores plus net. Yesterday it was 6,000 and odd crores. So what they were doing, 1,000 crores, 1,500 crores. Now the momentum is increasing as far as the sales are concerned. Today and yesterday, for instance, both the DIs have not been able to match the sales of FIs, DI buying. So institutional activity is now on the wane, in the sense there is more selling than buying as far as institutional activity is concerned. Now, the third leg of the stool is the retailers, and I think retailers also will throw in the towel because their favorite stocks are not doing too well, where institutions are not there. Now, look at overall liquidity conditions, which is the fifth point. You are seeing that the overall liquidity conditions are tightening, even with RBI having started their QE last April, have stopped the QE in November. So liquidity, RBI themselves know that they have pumped in money when the inflation was rising, and in my opinion, they are solely responsible for the state we are as far as inflation is concerned. We can import inflation, but homegrown inflation is quite, let's say, rampant across the board. So liquidity conditions globally, Fed used to pump in $120 billion per month. This is the last month when they will be pumping any money into the system, because their QE, which was $120 billion, have been reduced by 15 billion for 2 3 months, and then $30 billion, and the last of the $30 billion ends in March. Now, the next week is the Federal Reserve meeting, and Jeremy Powell has mentioned it yesterday, that he is willing to look for a hike of 25 basis points at least. So basically, what they are mentioning is, we don't care what happens on the Ukraine front. We will we will start raising rates as early as next week. So therefore, it's very clear in the next few weeks, months, there is going to be more pressure on liquidity than ever before. Therefore, you will see a dampening of the stock prices, because liquidity is the prime driver of the stock prices, much more than fundamentals and your emotional behavior of the investors. So there is a limit to what sentiment and fundamentals can take up the market. Now, liquidity is drying, and that was, if you draw a correlation of liquidity vis-a-vis stock prices of Dow Jones from 2008, for instance, you will see there is a almost 100% correlation between the stock prices going up and liquidity being there. So now we are in a situation where liquidity conditions have tightened, and this will get reflected. Finally, on geopolitics, though I discussed at some length day before yesterday or 3 days ago, many more things have happened subsequent to that, including a UN General Assembly which voted yesterday. The first time India, UAE, and China abstained. Yesterday, UAE has supported the proposal mooted by US. So now we are only two countries who are, let's say, not against Russia, because we have abstained, which means we have taken a stance which is both, which is neutral. Now, in the era of bullies, both US and Russia are big bullies. Nobody likes a guy who will be a neutral observer. So they want, if you are not with us, then you are against us. This is how geopolitics, is conducted. The diplomacy is conducted. So they are trying to put pressure on India to see that we align with the US. In fact, US has got a scheme called CATSA, where if a country is buying military equipment from Russia, they can sanction. So we are buying 50% of our goods, 50% of our imports, military imports are coming from Russia. Russia, 23% of Russian exports are to India. So as far as military exports are concerned, military trade is concerned, we are there up there. So we are in the eyes of the US Senate committee, which was discussing about 2 days ago, that they want to sanction us. Now, whether they are going to sanction and whether there is a possibility of a sanction coming soon is the reason why FIIs are selling much more. We will know later, but certainly there is a possibility of sanctions coming under the CATSA regulation, which has sanctioned, I think, 3 countries: North Korea, Iran, and Russia. So we probably will be the 4th country, the way US is going about sanctioning people who are not in their favor. So geopolitics, we are looking at the war between Ukraine and Russia. In my opinion, we should look at the economics behind the war between Russia and Ukraine. And we must know that India imports 80% of our oil imports, that is the edible oil imports, come from Ukraine and Russia together. So we are caught in a pincer, as we would say, where both Russia and Ukraine, we need both of them. So you see, one of them stops supplying, then our edible oil prices, the sunflower oil, for instance, will shoot up beyond measure, because we do not have access to other markets immediately. Now, if you look at commodities, we are looking at oil, which may not be the right parameter only. As I was mentioning, there are about 20 out of 28 commodities which are a part of the commodity basket, and the graph of that basket is just going one way, and there has been no proper corrections. And all of them are in what is called backwardation, which means that there are huge short positions sitting in the system. So therefore, the oil price movement, or any edible oil, or wheat, or soft thing like sugar, they are relentlessly going up. So we need to be aware that it is not only oil which is going to trouble us, it is also other commodities. And global trade will get affected if US and Europe are sanctioning, because they also are big trade partners with Russia. So therefore, it is just not only Russia will get affected, it will be everyone who will get affected. So therefore, then the last one is your technical analysis. See, when you are let's say, analyzing a market, the basics of technical analysis, my experience of technical analysis goes from 1993. Maybe I'm not that much experienced or not, let's say, an expert, but all I can say is I know basics of technical analysis, which tells us in a bull market, prices will be having a higher high and a higher low. That is what a bull market is. In a bear market, prices are lower high and lower low. Anybody who looks at the Nifty chart, for instance, would have seen that we have had a higher high, a lower high and a lower low beginning October 19th. If you look at from March 2020 till October 2021, we have had higher high and higher low. So it's a classic bull market or a bullish phase. So from October 2021, we have had exactly opposite. Now, I really fail to understand all the technical analysts who come on TV and who write in the media, why are they missing this very obvious point of a higher high, higher low being transformed to lower high and lower low for the last 5 months since October. That is one point. The second thing which any technical analyst will look at is volumes will rise, volumes will be high when the prices rise, and volumes will be low when the prices fall in a bull market. Volumes high on the rise and low on a fall in a bull market. In case of bear market, volumes will be low on the rise and will be high on the fall. Even today, you would have noticed it. The volumes were not as big when the markets were rising in the intraday, and then they fell on larger volumes. That is a second way of looking at differentiating a bull versus a bear. The third one is in terms of accumulation and distribution. Bull markets are generally having slow accumulation. You hardly see big falls in a bull market, neither do you see a big rise at one shot. You will have a slow movement upwards. That is what a characteristic of a bull market. The characteristic of a bear market will be that it will fall rapidly and then it will also rise rapidly and then the fall will be much more rapid. That we have seen 1,000 points moves within days in the last 4 months, which we did not see since, say, May, June of 2020. In the first 2 months when it started, there was turbulence, but after that, there was no turbulence. Then finally, look at what a typical analyst would do of moving averages. People say below 200-day moving averages, if the prices are trading, then we are in a bull market, in a bear market. If the prices trade above 200-day moving averages, we are in a bull market. Now, if you look at Nifty and Bank Nifty, as we speak today, both of them are below the 200-day moving averages, which separates the bulls from the bears, bullish phase from the bearish phase. Nifty Private Bank, FMCG, Realty, Pharma, Media, CNX 100, 500, Nifty Junior, Mid Cap, Small Cap, and now in the last 3-4 days, Auto and Infra have all entered into the below 200 DMA. The only three sectors which are above 200 DMA are energy, metal, and PSC, that is public sector enterprises. The ones which are on the borderline is the PSU Bank Index. So today it's almost touching the 200 DMA. So when you look at it, that there are only three sectors, energy, metal, and public sector enterprises, which are above the 200 DMA. Everything else is below 200 DMA. We must conclude that we are in a bearish phase. Now, if you take that hypothesis or observation that we are in a bearish phase, then let's look at where the bearish phases have ended in the past. So I went through data, and I have gone through data from 1991. I would think the real market started somewhere in 1991, not because I entered in 1991. It is just that before 1991, I was an investor since 1982. The previous 9 years, I was just an investor. I knew how difficult it was to get liquidity in the market. There were very few brokers, very few investors. Only in 91, 92, you had a large number of investors comparing to the previous 10 years who entered the market after liberalization, and they were accentuated with Harshad Mehta coming in, and you had more number of investors coming in the first phase in 92. So I've gone through data from 1992 onwards, April 92, when the market crashed, till date. There have been 11 bearish phases, 11. So why have I used this data will help us to know where the bottom probably could be. Nobody can say for certain, but at least we will have some numbers to play around. So now in April 1992 to March 93, the Harshad Mehta scam time, the market fell 56%. 94, 96, 40%. 96, 7 months, 33%. Then 97, 98, 40. 2000 dot-com scam, 55%. 2004 was 32. May 2006 was about 31. January 2008, March 2009, which was the global financial crisis, was about 60 to 65%. Then the ones which many might have seen would be after that, which is November 10 to December 2011, which is about 28%. March 15 to 16 was 25%, and January 20 to March 20 was 40%. Now, if you look at these 11 bearish phases, 8 of the 11 bear markets have been between 25 to 40%, say approximately 30% in terms of the price decline. In terms of time, most of them have been between 12 to 15 months. So when I made a hypothesis a few months ago, I had said that we will get we are likely to get a bear market in 2022. And if that happens, there is a probability that the prices will fall in 20 and 30%. 20 is the minimum. Approximately it will be 25 to 30% range, and it is likely to last for a 12 to 15 months. This is what was based on my research on all the bear markets beginning from April 1992. So just to reiterate, there were 11 bear markets. Out of that, 8 had a drop of between 25 to 40%. 2 mega bear markets, which was Harshad Mehta, three other markets, Harshad Mehta, the dot-com, and the global financial crisis had all above 50%. So if we assume that it's a plain vanilla bear market, then it follows that we should have a drop of about 20 to 30%. Say, let's say it talks of 25 to 40%. Let us draw a map between 20 to 60%. 60% is the max we have seen. So if you take it at 20%, then we should see Nifty dropping to 15,000. If you see 25, it should be 14, 30 will be 13, 35 will be 12, and 40 will be 11,000. So I'm not talking of 60, which is 7,500, which was the beginning of this bull market. Let us just remove 20 and 60. So we should see a drop of the Nifty between 11,000 to 14,000. So let us say it's a milder version of a bear market, 14,000. If you talk of a typical bear market, it should be about 12,500. Now, we are sitting here at 16,200. So if you really look at these numbers in perspective, 15,000 on Nifty was achieved in April 2021. April 2021 during the second phase of the COVID. In case of 14,000, this was just before the budget. 14,000 before the budget of 2021. 13,000 was around Deepavali time, just before they announced the vaccine. And 12,000 was in October 2020. 11,000 was end September 2020. 7,500 was March 2020. So you eliminate 7,500, you even eliminate 11,000. 12,000 was seen in October 2020, and if you eliminate that and just say only 30%, then November 2020, in Deepavali of November 2020, we saw 13,000. And if you take 25, then we have seen it in February 2021. And okay, you say it's a very weak bear market, which is only 20%, because that is the minimum definition of a bear market. This was seen in April 2021. We should go somewhere close to 15,000. So when I hear people talking that if you have a bear market, it cannot go below 16,000, which definitively people talk. Recently, the big bull also mentioned something like that. Then one begins to wonder, when you look at data, whether this is right, the right way to look at what a bear market is. Now, if you look at what was the prevailing situation in last February or November 2020, things have got worse, is what we have observed. things have not got better since then. So why would the market not go to 15,000? Why would the market not go to 14,000? Why would the market not go to 13,000, which is a standard bear market? 13,000. 12,000 is actually the median bear market. 11 and 7.5 we are not even discussing here. So let's say it's a harsh bear market, then it could go maybe 11,000. And some people are perma bears are looking at 7.5, which is not an impossible thing because we have seen it three times in the past. So let's say if you really look at this data, what comes to my mind is the information on 7 parameters shows me at least that we are in a bear market, and we are now slowly and steadily proceeding there. And there is a very high probability that this will get into a full-fledged bear market, which is more than 20%. And therefore, we should be somewhere between 13 and 15,000. We should bottom out. In terms of time, if you go by the old theory of 12 to 15 months, if we believe that it has started in October of 2021, we should bottom out by this December. So 2022 should be a year where you will see a drop, which we can characterize as a bear market. And 2023 onwards, it could be a flat market or it could be a beginning of another bull market. That we will have to go around assessing it as time passes by. But based on available data, so if say somebody asks where is the bottom, my humble submission is that probably the bottom is between 13 and 15,000 based on data, based on experience. This is what I would say a probable range between 13 and 15,000. So I will end it here. So somebody wanted to know, please tell me where is the bottom. So I have given you data, and based on that, I have analyzed it, and I have tried to give some sort of informative piece which talked of 7 points: economic indicators, corporate performances, stock prices, institutional activity, overall liquidity conditions, geopolitics, and pure technical analysis, and the data of the past 11 bear markets. So the 12th bear market, which if we have started, which I believe we have started, is going to end somewhere between 13 and 15,000. Now I will now stop here, and I've just finished my 25 minutes. Thank you for listening to me. If somebody wants to ask questions, please let me know. Today, unfortunately, I don't seem to have anybody to help me out, but I'll take care of it in terms of moderating it. As usual, please keep your questions brief, and if you want to challenge my hypothesis, I'll welcome it, because that is the whole purpose of this room. So I don't want it to be an echo chamber where everybody accepts whatever I say. Please challenge me on the data, and therefore on the analysis based on that data. Thank you very much. So Rajma Chawal wants to be the first person. I have invited him. So Sunit Sebastian wants to be there. Just give me 30 seconds. I will see who all want to come. And Anish, I would have loved Anish to come. Chetan Gill, Chetan Gill also I have sent an invite. Then who else is there? I have sent an invite to you, Chetan. Then Anish, I have sent you. Then Vinay, if you want to come in, Shubhi, if you want to come in, anybody who wants to come in, please raise your hands, and I will try to. Vinay, I've invited. Then Sunit Sebastian. I don't know what to do. I mean, how do I get this person? I think it should come, right? Yeah. So Sunit also have sent an invite. Okay. So Sriram is there. No. Okay. Can we start off with Rajma? Rajma, you got something to say?
Yeah, sir. Thank you for letting me speak. So my question is that let's skip directly to the November time. When you are saying that by that time the maybe like there will be a lot of 20% decline or 25% decline. At that point, you mentioned about the earnings that because of inflation there will be a lot of stress on the earnings. So I guess at that point all the news channel will be coming up that okay, there is a drop in earnings for this company, this stock. At that point the sentiment will already be quite down. I'm assuming that in that particular period, like let's say the last quarter of 2022. So what will be the reaction? Because I guess in the bull market, whenever there are bad earnings, people still keep on buying. It's like a bullish news. Like if there is a junk rating for for a country, it will be bullish during the bull market. But in the bear markets, bad earnings are not. You can say the stock gets punished heavily. So during that time in November, when the earnings actually start to hit because of inflation and all, or stagflation, what will be the behavior of stocks? Will that be the right time to jump from, let's say, value to growth, or will that be also we have to like first see some base formation, or yeah,
Yeah,
that's a
yeah,
question.
Ratma. Yeah, thanks for that. So I take it month by month. So somewhere around budget time, I had mentioned that please hold on to your horses till April, and I think we should hold on. And since I am doing these sessions every week, if I notice that some bottoming out process, if I have seen, for instance, I base it on 100 DMA. If the market starts trading above 100 DMA, it's a good time to enter. So this is what I have seen, noticed over years. So we may not catch the exact bottom, but we will get a trend, which is a bullish trend. So now in November, we will have to see that. See, I had also mentioned that it will be front loaded. The fall will be front loaded. That is in the first quarter calendar year. So I had expected by March end or first week of April, we should, or maybe mid of April, when the results start coming in, you will get a hang of it, and the market may react violently to bad results. November is later, but it could react in the first quarter, is what I had thought. Of course, one can be wrong in terms of precise dates and time, but I feel by November, December, it will be a settled issue as far as the inflation is concerned. That unless inflation magically falls off, then it's a different thing. Any which way, we are going to be on the job analyzing it, and we will get to know. So markets may punish the bad results much before that. Mostly they do, because we always say markets discount the future, and invariably you will probably market will probably move the pendulum the other side. So we will get an idea, fair idea, I suspect, before Deepavali, around Deepavali time. But nevertheless, I'm having an open mind, and let us see as we go along, week on week, week on week. And if I find something interesting on the bullish side, I'll be the first to report here. We can have a longer discussion. Right now, the purpose of this room, purpose of today's discussion was, please do not do bottom fishing. It is not worthwhile, because anytime you bottom fished in the last 4 weeks, for instance, or even 4 months, you invariably have it has been a loser's game. So my only request has been, I have presented you data. If you still think you should do bottom fishing, then go ahead. But I will not put my money at least till April first week, and then I will continue as we go along. So that's what, Rajma, are my thoughts. I will certainly come back to you if I change any of it. Thank you on that.
Awesome. Thank
Yeah,
you.
thank you. Chetan, would you like to just take forward this discussion, please?
Yeah, thank you, Vijay, for inviting me on the stage. Um, yeah, I would agree to your extent. One second, is my voice echoing?
Yeah, slight echo, but it's okay.
Okay, I would agree to your hypothesis on the bottom fishing that you don't have to. In the 2000 and to 2003 infotech boom and bust time, I was a student that time, but I observed it and participated it also in the markets to some extent. So yeah, bottom fishing was not a good idea that time, except when the 2003 bull run started off till 2007. Then again 2008-9 bottom fishing did not work. It rebounded in 2010, but till 2013 to 14, you had to wait if nearly 6 years to make up your money. And in some stocks, you would have never made, like DLF or some real estate stocks or some financial. So I agree with your context. I'm talking more about the index level just now. Even on the index level, in the Infotech bust, I saw it coming down from 6,000 to 2,800 in a matter of 3 years. And in 2008-9, from 20,000 to 8,500, rebounding back to 20,000, coming back to 14,000, and then stagnating. So that means it would have taken you 6 years nearly to recover your money. But this time they say that they always say this time is different, and those are the four most dangerous words in the world. But they think sir, that retail has become big, and maybe 4 5 crore, I don't know the exact number how many demat accounts have opened. So that is 3 4 lakh crores of money, and then there's 1,20,000 crores of money coming in from the SIPs. So I don't want to contextualize 2000 and 2008 with 2022. But what would you say about this retail money, demat and plus the SIP money?
Yeah, I have taken that. That's why I said there's a third leg of the stool. So there are three legs: FII, DII, which I'm including the PMS guys and the AIF guys, and the third is the Robinhood. Now, it is a fact that retail has grown, and it is a fact that demat accounts have opened, and there's a lot more awareness when compared to 2000, 1992, 2000, 2008, and now. But what I have observed is when in 1992 the retail came in. It was this single biggest phenomena affecting the stock market in 1992 because I was there and I was a sub broker. I had no orders for first 4 months after I started my business in 1991 between September and January. Nothing. I have an advertising background. I was with Ogilvy, and my boss had told me that if in a year if you don't succeed because you have no background, and then you come back to Ogilvy, we will keep a place ready for you. 4 months into my business, I was earning approximately 3,000, not even 3,000 rupees. My Ogilvy, if it was 10,000 per month, here I was earning about 2,000 to 3,000 rupees. So there were no clients. Now, January first week onwards, the client trickle started, and by the time Harshad Mehta became a well-known name. I had to open an office. I operate out of home. I had to open an office, and I had to work till late in the night because there are so many phone calls. I had never seen so many clients coming to me and talking to me. In fact, it looked completely surreal. That was 1992. So if you compare, if somebody had told us that now so many clients have come, where is the question of market falling? Market did fall for whatever reason. Same thing happened in 2000. 2000, you see, I had clients coming from abroad when I was still I was managing a broking firm for few friends of mine, and I could not go home till 10 o'clock in the night. That is the kind of people. In fact, the bus driver used to stop outside my office so that he can come and trade. Unimaginable crowd. There was no way, and I'm a very small broker. So 2008 was similar. 2007, I had all kinds of people who called me up and became my client. So again, 2000 was higher than 1982. 2008 was higher than 2007 was higher than 1999, 2000, and I've seen in 15. And now, of course, I'm not in broking, so I don't have too many clients. I just have a few friends, but I'm able to see the same thing. So every time you feel it is different because you say, okay, between 2017 to 2022, the number of demat accounts have grown. But if you look at between 1986 and 1992 or 1988 and 1992, the number of people who came into the stock market, enormous kind of thing. So it's always there. Now, how do we test this hypothesis, whether these guys are strong or not? Look at the stocks which a typical retail investors would have jumped in. See where they are. They have fallen much more than the index. If they've fallen much more than the index, then they are not strong. That's what logic tells me. If they are very good or if they're very strong and if they're doing all the SIPs, then why should those share prices where the retail interest is there fall off much more than the mainline index? So I feel this is just one of those times when the numbers have increased, but this will again prove what happened in 1992, 2000, and 2015, 16, and I think we will meet the same fate. To say that we will never get a bear market because there are people buying it, I don't buy that theory, because it is never, I mean, there are cycles. It's like saying there'll never be a monsoon because if we are in summer of, in May, June, you'll always win there's never a monsoon. So I think time will tell. As I said, I will be on the job. I'm keeping an open mind. I just gave you data. This is where we can find. Let us see where it goes. Yeah. Thanks, Chetan.
Yeah,
You
thank
want
you,
to ask any?
Jason.
Yeah. Yeah. Yeah, Anish, you are the most experienced guy, and you have much more better vision than I have. So, love to hear you.
No, no, not more experience than you, but having seen a few cycles now, I don't think I that it's surprising that we see every cycle has its own catalyst, it has its own its own reasons to I think it's that Leo Tolstoy quote in Anna Karenina that every happy family is like every unfortunate family has its own story. It's different. So every bear market has its own reasons. This time it is, is it inflation? Ukraine, Russia is just the catalyst. I mean, this was somewhere waiting to happen since last year. It was, I think, uh, the way I was thinking through this was that when COVID cases stop rising, and we sort of move from a pandemic to an endemic situation because markets are discounting machines. They fall on good news, and there's no longer a wall of worry to climb. So that's one aspect. Second is, I think the big shift came in November, December, when the Fed acknowledged and dropped the word transitory. I think that was big, and that acknowledged that also underscored the fact that they were caught on the wrong foot and they had no choice but to acknowledge it. Stan Druckenmiller said this 5 years ago that policymakers have no end game, but markets do have an end game, and policymakers just, I mean, I don't blame them because they are at the end of the day appointed by their political masters, so they have no choice but to play along and kick the can down the road till they can. Markets at any point in time can seize back control, so, and we are seeing it this time. The Indian 10-year yield is at around 6.8, 6.9. The US 10-year is at around 2 years. Now, the trouble with the yield again is that the long term yield curve is suddenly is flattening. So, which tells us that demand for long term loans perhaps is not there, and usually it is indicative of a recession. That's the popular notion. Now, if that is the case, then the Fed will basically have to pull out a rabbit out of its hat to go on a rate hike cycle and then cut quickly. And it's a tough one to do that. How are they going to do it? How are they going to get out of it? So I think it's basically, I would say that and just to add that I don't use any of this analysis in my investment, as Vijay knows and as Prashant and all my friends know. I'm a systems driven investor. uh, we had started getting sells right from September, October, and we were like in 20-30% cash, and now we are in a lot more cash. If the market turns around tomorrow, we'll start buying. If a system tells us to start buying, we'll start buying. If a system tells us to go sit in cash, we'll sit in cash. And but big market observers, you cannot but yeah, people think speculator is a bad word, but speculator actually comes from the Italian word speculare, which means to observe. So, I mean, George Soros is a speculator. I'm happy to be in that company and say that, we are observers of the market. We can only observe what is going on. And it's going to be a friend of mine, with whom I co-wrote a paper, Rajan. He incidentally asked me in January. So he said, we were just talking about the paper. And he just asked me, Anish, what do you think the year is going to be? And my first reaction was volatile. I said, I don't know whether it's going to be up or down, but it's going to be extremely volatile. And usually, volatile means it's on the downside. But I mean, I see that the market is stalling, and it is going to be extremely volatile. So I'll stop there, and I just hope that my rambling thoughts make some sense. Thanks,
No, no,
Vijay.
they're not rambling at all, Anish. You're being very modest. I think you always add a new perspective when you come here. Always really worthwhile to listen to you because, and I really appreciate that you have a system driven. So therefore, you don't have to sit down and do all this calculation of what happened in June 1996 and what happened in July 2020. Your machine will do all the work. Here, I'm a slave to my own
Yeah, but at the
data.
end of the day, we still have to pull the trigger. So we
Yeah,
can
yeah,
have
I know.
the machine, but some like I tell people that I have to still come in the morning and switch the machine on, and
Correct.
otherwise it won't take the orders. So yeah, so I think it's still people, there's a notion that if you are system driven, that means the emotion is taken out. Actually, it's more emotional because you
Is
are
it so?
handing over. Yeah, because you are handing over control to a system, and
Yes.
it's telling you to get out, whereas your instinct might tell you something else. But I mean, it's been a long time now, but I'm talking about my initial years. It's a lot of people are overriding systems, I can tell you that now. And
Oh,
just
okay.
yeah, people override systems all the time. I've done that in the past. So, but and I've always realized my system was smarter than me, and I've learned it the hard way.
Yeah, I know, I know. Yeah, yeah, yeah. Yeah, thanks, Anish. Thanks a lot. Vinay, would you like to say something?
Sir, my intention is what do you think the market correction is a healthy correction? Like in terms of percentage, 20%, 30%. And if the market corrected 30%, so how will you identify the sector rotation so that they can safeguard their investments, IT sector or metal sector? So it's always in a rotational basis, take commodity sector like that. So how can identify and can we safeguard our money? So
Yeah,
is it possible to give some notes?
yeah. Vinay, as far as I know, no correction is healthy. This word healthy correction has been used only by these people who don't have skin in the game. Now, how it can be healthy correction? Because how can you say I'm looking forward to healthy correction for my portfolio, for instance? So I think there is nothing like healthy correction. What I do is that I look at history, I look at data, and I would see what is the probability that we will have a correction of this magnitude. So I have laid out my points. What could the bottom be? And I am not saying that that is the final point. I am just going to look at it on a monthly basis. Now, which sectors to invest in? Generally, we have noticed in the past that one sector which is popular in one bull run will not be so popular in the next bull market. So the trick is to not be wedded or at least predetermining a particular sector will do well next time. So if you look at the great investors like Warren Buffett, for instance, he never does any sectoral investing. He does stock investing. So he looks at stocks and he decides, okay, this stock is good, and he would buy it. So I am no great follower of Warren Buffett, but I have learned that it is better to look at stocks rather than any sector. These sectoral analysis are all good for these mutual fund guys who want to set up some sectoral funds. There are sectors which will do well sometimes in the bull run and sometimes they will fail. For instance, in this bull run, you had metal sector, especially Tata Steel, SAIL, and all doing very well, and they were the first guys to top out. The bull market topped out in October, but these guys topped out in some August or something. So it is difficult to just say a sector or some sectors or a couple of sectors. Personally, I always look at stocks. I have never looked at sector. Sector doesn't at all attract me. Probably in 2000 and 2008, in fact 2000, I would say, the sector .com and everybody was interested in tech. Other than that, in 2008, there was some interest in infra, but I don't think it was uniform infra. Infra, you had L&T as infra, you had DLF also infra, but they are two different businesses altogether. Whereas in 2000, most of them were aligned in terms of all of them software services companies. So my philosophy is look at stocks, don't look at sectors. Look at some parameters which have shown in the past as the market is bottoming out. I gave you one example of 100 DMA is a reasonably good way of identifying the market has bottomed out. Of course, as we go along, we will get some more inputs. That is the whole purpose of this room, for instance, for me to get perspectives, to learn something from you all, so that I can use it in my analysis and see whether I can do a better job next time. So anyway, we are in touch almost every day, Vinay. So I will come. Let us jointly identify some things which are profitable for both
No,
of us.
thank you, sir. Thank you, sir.
Thank you, Vinay. Sunit?
Hi, Vijay.
Yeah, hi, Sunit.
Okay, for starters, I must commend. It's very often that we find people making discussions on the basis of sentiment or assumptions or just feeling, so to speak. And when someone presents data as the fundamental background on the basis of which they support their claims, it's always a refreshing change of pace.
Thank
So
you, Sunit.
I appreciate that. But since you have looked into the data as much as you have, I have a question for you. You've studied bear cycles and you've studied the impact it has had on the market. You've also mentioned an approximate or a supposed time frame that one can expect it to bottom out in. But have you also at the same time observed how long does it take for it to reverse into a bull market, and how long does a sideways market tend to occur once the market's bottomed out? Do you have any kind of data on that of any sorts? I would be keen to know about.
Yeah, I do have. For instance, if you take there was no Nifty in April 92. The Sensex topped out at 4550, for instance. It dropped to 2000, below 2000 in March 1993, less than 11 months. And then it hung around, and then it took off in 94 to 4640, almost a double top, you could say. And then it was a long sideways market. The first 12 years of my life was wasted in, not wasted, I would say it was a terrible time where nothing was happening. So the index per se did not do anything till as late as 2004. Even in 2004, May 17th, you would have got the Sensex below 4550. However, in 99 2000, you had a dot-com boom. So tech sector did extraordinarily well. Of course, the index also went to 6,000 plus, but that was very short lived. So you have the index per se. To be honest with you, I don't pay much attention to index using that as a benchmark for investing. But since the whole world looks at index, so I have made this analysis. I look at stocks, and now if you look at indices, as I told you, this was about 12 years we had a sideways market. Then if you look at 2008, when Nifty topped out at 6350, it came back to the same almost a double top in November 2010. That's hardly, let's say, 18 months. But then you see, after that, it fell again to 4550 or something in December 2011. Sorry, 2012. So between that 6350, what we saw in January 2008, the next time it really crossed effectively was in March 2014, just before the NDA government. So it was a 6-year sideways movement. So, but in that time, we have had a recession. We have had so many stocks moving up, so many sectors moving up. So, index many times, is not a great indicator for your investing purposes, but surely it has got some sentimental value. And of course, index has got 50 stocks, and surely if index goes up, stocks are doing well. So it is okay in that sense. But I would look, see, I have I keep telling this every single time. My portfolio is almost 70% is an ITC. If you look at ITC, for instance, in 2013, ITC was 230 rupees. The Nifty was 5500. And Nifty has gone up 3 times. It has gone to 18,600. This ITC damn thing is sitting at 5,500. So if you have bought ITC as a great stock in 2013, and it has done very well in terms of dividend growth, everything, but the damn share has not moved up at all. So sometimes timing of the wrong sector, wrong stock also may pull you down despite the index going up. For instance, I bought it only in the last 6 months, and I've been wedded to that thinking for the next 4 years. What happens to the index, I don't care. ITC should give me a 30% CAGR. So I think finally it comes to stock picking. So index sectors will not do, may not do anything. For instance, DLF was 1,300 rupees in 2008 January. Today it's some 400 rupees maximum it has gone. So, and this is, I'm talking of taking care of all corporate benefits and all that, excluding dividend, of course. So DLF, which is the number one real estate company in 2007-8, it is the number one real estate company today, but the price is down by 60%. So sometimes stock prices need not reflect reality. So you need to, I mean, it is an iteration. It's an iterative, let's say, process. I would say it is not. I mean, I have also learned through the hard way through whatever 30+ years that everything, every day, every week, every month is something new happens. Even today's movement was quite surprising to me somewhere midday, but that's how it is. But I think it's finally stock selection rather than just banking heavily on index. I hope, Sunit, I have tried to answer some part of your question.
No, I mean, I get it in the sense that I would personally as well look at stocks more so than indexes. I was just curious to understand if there's a cyclical nature or rather a pattern that is observed in, as you've mentioned with the correction and how severe the correction tends to be. So just out of curiosity, how long that lasts, just from the point of view of information and data is what my question was.
Yeah, yeah.
So
As I said, sorry. So I won't be surprised if this 18,600 doesn't come for 4 years till 2025. I won't be surprised because it has happened in the past 6 years. The market has done nothing. 12 years market, the index has done nothing. So we may see, but it doesn't bother me in that sense. So let it remain at 18.6. Let 18.6 come in 2025, for instance, 4 years. 6 years it's happened twice, I think so, and 12 years once. But if I can get hold of stocks, then it will be nice. Is what I would go for. For instance, Nasdaq took I think 10, 12 years for it to go back to where it was, and I think Dow Jones also took a long time. So it has happened in the past. So it's okay, I suppose, at the end of the day.
thank you so much.
Yeah,
During somebody else's
yeah.
answer, you had mentioned something about 100. Can you some point beyond which you tend to get into a position? Can you clarify that, because I don't think I understood that correctly.
Yeah, see, I use the simplest of the tools, the moving averages. Moving averages is a trend following tool. I mean, with whatever little experience I've about since about 1993, I have gone through the whole 9 yards in terms of Elliott wave and all these Renko charts and various things. But I have finally found out simplicity is the best way to go, and I use moving averages primarily. Moving averages, you have popular ones are 9 day moving averages, 20, 50, 100, and 200. So I use 100-day moving average to see whether there is a change in the trend. So right now, people use 200 DMA, people use 9 and 20. If you're a small short-term swing trader, probably use 9 DMA. I use 100 to understand the trend, whether it goes from bull to bear. But I use 9 and 20 to understand for swing trading. So I use a combination. Of course, I use Fibonacci. I use other things, but the most important thing I do is for moving averages, because that will tell you actually what has happened. Fibonacci and all are the theoretical constructs, in my opinion. You are making projections based on I don't know what, but moving averages is not projection. Moving averages is what has actually happened. So it is just a collection of data spread over averaged over time. So for me, it serves fine. And so 100 DMA will tell me whether we are in bull or bear. Right now, it is trading below 100 DMA, most of the instruments. So therefore, I am willing to accept that we are in a bear market. So that's on 100 DMA.
I think I didn't phrase my question correctly, because I'm aware of the moving averages. I in fact day trade as well as swing trade, so I use that actively. I think I didn't hear that you follow the 100 EMA approach, but I think what you use it for primarily is to watch the trend reversal more so than buying at that point, if I'm not mistaken. Correct?
That's correct. Yeah. Right
Okay,
now,
yeah,
we
that's
are
all.
below it. So, yeah.
Got it. Thank you so much.
Yeah. Thanks, Sunit. Yeah. Thank you, Sunit. Venkata? Venkata? Okay. Nakshebas, would you like to say something, please?
Yeah, hi, and thanks for the
Yeah.
opportunity.
Anish, I'll come
I
back to you. Come back to you after
Yeah,
Nakshebas.
no worries. I'll come back up.
Yeah,
Next.
I just had a couple of questions. One to you, Vijayji, predominantly. Of course, you've had such a long tenure in the market. Right now, I see like too many forces, sort of influences, negative influences converging at the same time. The debt pile, the inflation, the strategic shifts between multiple players, the commodity prices, food prices, in some ways also a post truth world where at times media is difficult to believe. It's difficult to mention truths and lies often. I mean so it's quite difficult as an analyst to figure out whether the strategic shift is happening, winning, or actually gaining ground, or losing ground. So multiple factors playing out at the same time. I just thought I'll check your perspectives, whether you've seen this degree of uncertainty play out at once, and whether you've seen, and in that context, would you expect this round of correction to potentially surpass the previous bear cycles, assuming this is a bear cycle? This was the first one, and the second was with, in fact, Anish. He mentioned the systems approach to investing. I was just curious that if these sort of events lead to a tail sort of an event, does the approach, if you look at systems approach, do you I mean, I'm just wondering how exposed would such an approach be to such tail risks? I mean, unpredictable, absolutely unpredictable, out of the blue, once in a, 100 year sort of risks. Those were the two questions. Thanks.
Next ones I'll answer, and Anish will, of course, add soon after. See, every time you feel it is different in the sense, while the bulls may feel every time is different, as a bear also people may feel every time is different. So, what are we seeing today? High inflation. We are seeing global, let's say, uncertainty. There is a war, possibility. Which is going on. But these have happened in the past. So, for instance, in 1999, let me tell you, one of the worst periods we had in '98. We tested the atomic device, and we were blacklisted by USA, and we were sanctioned. And we had the UTI crisis, where UTI, one day the chairman got up and said, "Boss, I don't have any money." And UTI was, like LIC does it now. What do you think will happen to the market? That's exactly what happened to the markets in '98, late '98. So May 1998, a nuclear test, blacklisted. Somewhere, I think August or September 1998, the gentleman says UTI has gone bust. And UTI was the institution where everybody goes. Market rescue, UTI. It was not LIC, it was always UTI. If you see that movie, not that serial, big, the scam, they talk of the UTI chairman. So UTI was the big boy then, but UTI went bust. And so you had, in '98, you had the atomic test, UTI, and Russia defaulted. LTCM collapsed. So long-term capital market was a very big institution started by these Nobel Prize winners and collapsed. So you had three situations. Then come to '99, you had the Atal Bihari Vajpayee voted out with one vote. So you had the political uncertainty. Then you had in May, June, you had this Kargil war. So if you take from May to May, May 1998 to May '99, I was there, so I know what terrible times they were. Economy was not doing well. You had Indica, which was launched by Tata Motors, which was a super failure. So Tata Motors collapsed completely. It went, I think, to 3 digits, below 3 digits. Tata Steel went to below 3 digits. There was nothing happening in the economy. And because it was after Devegowda, it was this Gujarat government. So you had political uncertainty through and through, and you had all these issues. Then you had the Kargil war. Yet index crossed that 4600, which was there between 92 to 99. It crossed in October 99. I think if I remember vaguely, the BSC, all of these guys went on, blew up the balloons, 5,000 Sensex, and it went up when Vajpayee won the election at that point of time. So you had very dark times, as they say, the best of the times and the worst of the times were there at that point of time. But then you had a big bull run beginning '99 April, May in the Kargil war, and went on. That was the .com one, which went on till March of 2000. So these kind of things have happened. This is one example I'm telling you. Really, at that point of time, even Clinton was weak. He had got into that Monica Lewinsky problem. the various things. You had Diana accident, all of that. I mean, of course, Diana accident may not have anything to do with the stock market, but I'm saying the mood was very, very bleak. So mood is not that bleak now. So that is a difference. So one can never say that things will not in the darkest of the nights. You will get the you will get a sliver of light. So I don't want to go the route saying that this will be the worst of the bear markets. I will say let's take it step by step. Why make fancy predictions? Why can't it be 60%? Somebody has mentioned it will come to 80%. Some bullish guy who comes on Twitter has been mentioning that it will come down to 80%. Elliott wave specialist Robert Prechter talks of a 90% fall. So now I don't want to go there 80%, 90%, because I have not seen more than 65% in my lifetime at least. So let's see. At 20% I get trolled. At 20% I get trolled. They say it's impossible that it will come to 14,000. Impossible. So why would I want to have some dreams of 60, 70, 80%? Let's see next month. Let's see following. What I'm saying now, what should we do? That is important. The important thing is don't put money into the market. That's what you should do. You should not put money into the market. More than that, we will see what will happen. Yeah, Anish.
Yeah, that's very helpful, that perspective. Yeah, thanks.
Anish?
Yeah.
Please.
So, Naksheva, the question was what happens to systems during
During tail
events?
events, yeah, exactly. That was the question. That's it. Thanks.
Yeah, so actually, most of these systems are more than investing systems, they are risk management systems, I would say. So usually they are they are designed to cut off the left tail, and so most of the time they are what do you call? They try to keep you in the hunt for an outlier and try to take you out in tail events, especially like this. Now I've seen it twice in 2020. I've seen it now again. This cycle that somehow the systems have been able to. So we use a combination of momentum and trend systems. So obviously, if the trend starts breaking down, or if the momentum starts weakening, the systems automatically start getting us out. I mean, it will start giving you more exits and giving you fewer entries, and that's what we do.
Yeah, sure, got you. Thanks.
Thanks. Vijay, my question to you was, there is this, and again, I'll get trolled for this. But I've written an article on it, so I don't want to. And my friend Praveen is in the audience, so it's okay. But there was this, this particular. I don't want to call it cult of investors, but okay, let's say style of investing style, where it was that this company is great and it is going to compound, so just buy it at any price. You're buying it for 20 years. So
yeah, the BAP company. The BAP ones.
Yeah. So what is your view on that?
Anish, I whenever this BAP argument came, I said, okay, just go back to 2008. What was the problem in 2008? Everybody says Lehman Brothers. Everybody says subprime. So I said, how is subprime related to India? How is Lehman Brothers related to India? Accepting that the FIIs were pulling out money. FIIs were pulling out money from September of 2007. Yet the market peaked out only in January. Okay, which is the best, one of the bluest of blue chips, the BAP companies of 2007-8? HDFC, Twins, Asian Paints. Okay, Asian Paints, let's keep it aside because it's connected to oil. What HDFC and HDFC Bank are not connected globally, they are locally. They fell 65%, 65. Why did they fall 65%? So when HDFC Twins can fall 65%, why can't these BAP companies fall similarly? So I've never understood this concept of BAP, because the people who are propagating this BAP, they should know better that they can go back to history. You don't have to go too far. I'm talking of 2008. There was no reason for Indian markets to fall the way they fell more than Indian US markets. Okay, no problem. We are illiquid markets. We are not having debt and all that. Why did HDFC and HDFC Bank fall in that 60% plus? If somebody can answer that, then we can say these BAP will never fall down. The BAP, I'm fairly certain, will fall 50% at least, if not more, because more people are stuck in the bus. Will probably have a bigger fall than that. So I have been advocating that the first BAP sector is your tech sector. The tech sector, when the tech sector bottoms out, I would think the market has bottomed out. I think Infosys and Wipro and TCS, they're all extremely
I,
overpriced even at these levels.
I think
So
you'll have
BAP,
to be a little bit more bearish than that because HDFC has already fallen 25% or 26%.
yeah, HDFC has fallen. I'm saying that time it was 65% it fell without.
Yeah, yeah. So I'm saying
So why
this
can't
cycle it could, yeah,
oh,
fall more
so
maybe.
see, all I can talk to people is I have since they say opinions are free. Praveen is here. He is a media guy. He'll say opinions are free, facts are sacred. I think some media baron had once mentioned. So I'm giving you facts. You tell me why it happened. Then when it comes to arguments, if just because you come on CNBC and you wear a coat and tie and I'm sitting here with a t-shirt, or it doesn't, the difference will be in data, not in how you project it, or your English is much better than mine, I make lots of grammatical errors. That is immaterial. At the end of the day, data tells you that it has happened once, it will happen again, and if you think it is not going to happen, then so be it. I'm not going to short that share, leave it. Let's see what happens. So that's what it is. So no question of getting trolled, Anish. It is question of, see, the more people troll you, when you are, when your analysis is correct, which I am sure it is, you should feel nice. When somebody trolls me for 20%, then I feel we are just starting the bear market. Yeah.
That's true. That's true.
Yeah. Hmm?
Correct.
Okay.
Hey,
Praveen, you are.
Praveen, yeah.
Yeah,
Let me
Praveen,
tell you.
don't escape now. I brought you here. Maybe GNA, before can I ask Praveen to throw some light? Praveen? Hey, Baba. Okay, let's get to GNA. We'll come to Praveen. GNA? Not able to
Hi.
hear me? Yeah,
Yeah.
yeah.
Yeah, I can hear you. Yeah.
Yeah.
So no, I don't have any question as such. I was just listening the discussion actually. Yeah.
Yeah, thank you, GNA. Shiv?
Yeah, hi Vijayji.
Yeah, thank you,
So,
Shiv.
yeah, hi. Thanks for your insights, Vijayji. I have a couple of questions from you. Like, we have seen extensive selling of from FII in last calendar years. I think they have sold more than the COVID times, and I feel personally, I will take a different stance on the market. I feel our market as of now is, as you know, very having very strength, because the kind of money pulled out by the FII, in that kind of a scenario, there should be a bloodbath into the market, and still we are just like some 15% from the top, and in even in a bull market also, like 15 to 20% correction is all right, because the kind of growth we have given from 7500 level after the COVID crash. So I think the retail investors and the kind of money put in last 2 years. So there, it's clear cut showing the underlying strength into the market, Indian market per se. So yes, it is right that there would be some stress into the market for next couple of months till the time FIIs are pulling out. But I feel that this is the right time to enter into the quality stocks, be there, and I will be holding a view that rather than not buying, I will be saying that this is a good time, but you should have a long term perspective for the same. Thank you so much.
Yeah, thanks, Shiv. Anyway, two contrasting opinions make a trade finally. Both the buyer and seller both think they're right. So, so be it. I mean, I completely appreciate from where you're coming from. Let's hope you're right, because you're actually putting money where your mouth is. Whereas people like me are scared and want to just, be on the sidelines. Let's hope things pan out the way you want to. Danish, would you like to say something? Abhishek, I'll come after Danish, please. Yeah.
Namaste, sir.
Namaste, Ganish.
Actually, first off, I had missed actually. Where do you see bottom, sir? Rather
Yeah,
than saying like,
I explained, Ganish,
yeah,
that if there is a typical bear market of 20%, then 15,000 will be the bottom. If it is a 25%, which is well within the range, is 14,000. 30% is again well within the range, 13,000, and 35 is also well within the range, which is 12,000. So 12,000 to 15,000. So I would take between 20 and 30% is what I've been saying. So it will be between 15 and 13,000. So maybe 14,000 could be a number which very high probability you will see. If you go by the extreme, so numbers are 7.5 is the most extreme because that is what's been seen only twice. And between the 40% also has been seen a couple of times, which is 11,000. But let's say analysis right now says we may see somewhere around 14,000.
Thanks, Vijay.
Yeah, yeah. Thanks, Ganesh.
Hi, Vijay. Sorry.
Praveen. Yeah.
I want to ask a question about this. I mean, you guys have discussed this HDFC pack, but one thing that these guys are saying, the HDFC guys are saying, is that since FIIs are dumping, FIIs are big holders in the HDFC stocks, that is the reason that these stocks have fallen really, really hard because FIIs are existing. But I think that the group is facing actually a lot of competition. In fact, if you look at after Aditya Puri's exit, there is a fundamental problem with the group that needs to be acknowledged now. It is not just that. I mean, it's a very simple reasoning that these guys are making that FIs are existing and FIs held a lot of HDFC pack, and that is why it is falling. I want to understand you guys, like, Vijay, how do you look at it? Like, I think that is a fundamental problem with the group. It's just not about FIs.
No, I completely agree with you, Praveen. You actually have spoken whatever I was supposed to say on HDFC. See, many times, once a leader from many years who has managed it leaves, then the company generally will not do well. Like you take Narayana Murthy, for instance, and Nilekani. After they left, then you see the company, it's a middling. The performance has been middling at best. So I think this gentleman was a larger than life figure. Again, HDFC was the first large private sector bank, which came in 95 or something like that. And they were the first movers. So they had the first movers advantage. And as you rightly put it, now that competition has come to bite at their ankles, I don't think they're standing up to the competition. At one time, they were almost like near monopoly, you could say. They were much better than ICICI. So there was not much of a competition. The Axis and Kotak's and all were still, growing. So you're absolutely right that this larger than life figure left. And now you are able to see what HDFC Bank, whatever I would say, the warts and the moles of HDFC banks are visible. So surely, in terms of systems, in terms of people, in terms of everything, HDFC Bank is no longer the god of.
Vijayji, I would
Yeah,
disagree with
yeah.
the kind of a data on this.
Hmm.
Last
Sure. Let me just complete. I'll come back to you. Certain, just 1 minute, Shiv. Please, I will certainly hear you out. So, Praveen, I would, I go along with you. I think HDFC will have to reinvent itself. A great company reinvents itself. So there is nothing it stops from HDFC from doing that. Right
Yeah.
now, they are not in the greatest of.
And
And if they don't do
Vijay sir,
anything, then yeah.
Vijay sir, I think if you look at the FII data for the last 6 months, it is like fine, it is reduced, but it has not reduced to justify all of the these HDFC guys saying that it is because of thoda sa kam ho gaya hai, but it's like they are making a big deal on that only. So that's what I
No, I
felt.
understand that. See, I keep telling people that for a share price to come down, you don't have to sell. You stop buying. That's all
True,
you need.
true.
Correct. So that's what FIs have done. They're saying, boss, I don't want to buy your bank. So that is why it is coming down because there are no takers for that bank, the product. It happens in any part of our life. So that's what has happened, Praveen. I completely understand. They are not run away from HDFC Bank in that sense of term. This drastic drop. If you look at the
Yes,
screener, it will tell you that
yes.
how much they have dropped out. But
Yeah, I think
see, this is.
there's also some amount of derating. In fact, if after, like Vijay mentioned, once you have a charismatic leader leaving, so once I think case of ICICI, Kamath leaving, and then Axis, PJ Nayak leaving. I think there's been a fair and Shikha Sharma leaving, and then Chanda Kochak leaving ICICI. And today, if you ask a lot of people, investors, in fact, who is the CEO of ICICI Bank, many will not be able to tell you, and that is a good thing.
Correct,
And
correct.
and that has, I think, also, if you see the performance of ICICI Bank and Axis Bank versus HDFC over the last couple of 2-3 years, that is a very very telling story. Like Vijay was saying, I think they've cleaned up quite a bit of the warts and the moles and the hairy situation. And I think HDFC has somewhere stumbled along in the tech game, and I think towards the end of Puri's tenure, that was coming to light, and I think the next guy is sort of facing the brunt of it. But they always used to get a premium, multiple. Now that premium is probably going away, and it's just another bank. Like Wells Fargo used to perhaps get in the US, and now it's just another bank. Even Buffett has completely sold Wells Fargo. So that happens. I mean, that's a circle of life, circle of companies.
Correct. Praveen, just to add meat to your argument, HDFC Bank latest FII number is 37 and odd, 37 and half. They were owning December 2021. In March 2019, they were owning a 38.7. So it's just 1.5% drop. 1.5. So 3% drop in the overall FI holding since March 2019. And so there's no argument saying that FI is a runaway from HDFC Bank over nearly 2.5 years. If just there is a drop of only 3%, so that's nothing. That's nothing.
Shiv had some other points I would like to know.
Yeah, Shiv. Yeah. Shiv is coming. We are coming. Abhishek will come back to you. Sorry, Shiv. Yeah, Shiv. Yeah, Shiv. Please go ahead. Shiv, are you able to hear? It's a problem on technology. Shiv, would you like to go out and come back?
Yeah, can you hear me now?
Now, yeah.
Okay, so if you look at last 18 months from HDFC Bank, they have opened some new branches in tier 2 tier 3 cities. 10 days back, MSME, a head of HDFC Bank, was giving an interview on a business channel. He was saying the kind of loan disbursement in MSME segment they have done in last 20 years. In next 2 years, they are going to give more than that, and it is not a pressure from the sales team. The market demand is like such that, right? And they are working on their risk management, which is HDFC is number one in all these years. If you look at the market share gain, HDFC has gained almost in last 2 years 3% market share from 7% to 10%. So I don't think so. Like there is any change in the fundamentals. Maybe demand market is all about sentiments. The sentiments are not good at the moment. So that's giving a good valuation for us who are looking forward for a long term buy for HDFC Bank.
Yeah, thanks, Shiv. Thanks for the perspective. Let's hope HDFC Bank does well because it was a premier bank. It is a premier bank.
Even
And
Vijayji,
let's hope
last few years, if you look at, they have opened new branches in tier 2 and tier 3 cities where they are giving a stiff competition to the PSUs. So they are gaining the market share from PSU banks. They have in COVID era time also they have hired some more than 10,000 people. So if a bank is going on a fast track growth perspectives and giving expansion in terms of the branches as well and the people investment, I don't think so. Like maybe it's a time where the investment is going on and the reward will come. So even if you look at, there is no astonishing kind of a negative sentiments in the numbers. Also numbers was also per se also was giving a 18% growth quarter on quarter and year on year.
correct. Yeah. It's what they call the Excel sheet bank. Every time they give 18 to 20%, between 15 and 20%. Let's hope. Let's hope that the bank comes back. All of us wish well only for the bank and for the investors in the bank. Abhishek, would you like to say something? Abhishek? Abhishek? Okay, then let me come to Anjani. Anjani, sir, not heard from you at all. Please welcome to our room.
नमस्कार नमस्कार विजय जी।
Namaskar, sir.
आपकी बात सुन
बोलिए
के
सर.
अच्छा लग रहा था, लेकिन बस एक ही चीज़ समझ में आ रही है
हाँ सर।
बियर मार्केट पिछले मतलब अगर 20 साल से जो चार्ट पर्सपेक्टिव देखते हैं तो 10 से 20% ही लगातार गिरती रहती है। लेकिन इस बार मेरे अपने कंडीशन इंटरनल बहुत अच्छे हैं, अपना प्राइम मिनिस्टर मजबूत है, अपने देश की कंडीशन से मजबूत है। इवन आप ये देखिए कि अपने पास अकाउंट्स इतने ज्यादा खुल गए हैं, लोग पढ़े लिखे लोग इस मार्केट्स में आए हैं आज आज की डेट में। उसी का असर है कि मार्केट जो है इतना नहीं गिर रही है, एफआई के इतना बेचने के बाद भी। तो मुझे ये लगता है, आपकी बिल्कुल बात से मैं सहमत हूँ कि बियर मार्केट बीरिश हो गई है। लेकिन मैं जो पढ़ता हूँ उसके अनुसार हर 3 साल में बेरिश मार्केट खत्म हो जाती है। मान लीजिए चलिए बेरिश मार्केट हो भी गई तो 1 से 2 साल के अंदर यहीं पे मार्केट रुक के दोबारा फिर चलेगी, निश्चित रूप से चलेगी। और मुझे ये आभास होता है, मेरा अपना ये कहना है कि लोगों की, देश के लोगों की ताकत, इन्वेस्टर की ताकत जरूर आगे ले जाएगी। आप एक बात देखिए कि जो ये मार्केट में शेयर्स गिर रहे हैं, केवल वही गिर रहे हैं जिनमें एफआई की अच्छी अच्छी होल्डिंग थी। चूंकि एफआई अभी पैसा निकाल रही है, और अगर आप ऑल टुगेदर देखिए एफआई का जो पैसा है हिंदुस्तान का हिंदुस्तान में ही है, वो यहाँ से निकाल के दूसरे सिस्टम में पैसा डाल रहे हैं। तो सर, मैं आपसे बहुत ही प्रभावित रहता हूँ हरदम। लेकिन मुझे ये इस जगह थोड़ा सा लगता है कि मार्केट निश्चित रूप से थोड़े दिन बाद अगेन चलेगी। शिव साहब की बात से मैं थोड़ा सा ज्यादा एग्री हूँ कि डरना नहीं है, पैसा लगाना है। आपकी आज एक बात नहीं सुनी मैंने, आपने विजय आज जी आपने कहा कि अभी मार्केट में पैसा नहीं लगाना है। तो मैं काफी देर तक सोचता रहा, मैं सोचा विजय जी से क्वेश्चन पूछूंगा क्यों नहीं लगाना है, जबकि मेरे मन में ये आ रहा है कि जो अच्छे शेयर्स हैं, जो 20% करेक्ट हो गए हैं, मैं उनको दोबारा लूं। बताएं, यही मेरा सोचना था विजय जी।
हाँ सर, मैं भी आपके विचार से सहमत हूँ। आप तो 3 साल बोल रहे हैं, मैं बोल रहा हूँ नॉर्मल बेयर मार्केट इज ओनली 12 to 14 months मैक्सिमम। आफ्टर दैट इट विल बी साइडवेज और इट विल गो अप। सो 3 साल तो छोड़ो, अभी 15 महीने बेयर मार्केट हुआ तो भी ज्यादा ही है। अभी तो मेरे हिसाब से अक्टूबर से चालू हुआ तो अभी सिर्फ 5 महीने हो गए। अभी मेरे क्या बोलते हैं एक्सपीरियंस, जो भी प्रीवियस बेयर मार्केट की एक्सपीरियंस देखे तो अनदर 10 months इट मे बी देयर। आई एम एक्सपेक्टिंग बिटवीन दीपावली एंड क्रिसमस मार्केट शुड हैव अ सिग्निफिकेंट बॉटम। उसके बाद मेरे ख्याल से साइडवेज जाएगा या ऊपर जाएगा सर, दैट इज व्हाट आई फील। एंड आप जो बोल रहे हैं व्हाई कांट वी इन्वेस्ट, व्हाई आर यू डिसइन्वेस्टिंग, लेट मी गिव अ पर्सनल, आई मीन मेरा जो पर्सनल का ओपिनियन है। देयर इज अ मार्केट सेइंग, there are bold traders and there are old traders, but there are no bold old traders. So मैं तो old trader हूँ सर। पहले मैं बहुत bold था, I used to not bother। अभी तो जब मैं old हो गया हूँ तो अब मेरा boldness चली गई, तो मेरा जो भी मैं बोलूँगा caution ज्यादा रहता है सर। So ये ग्रुप में बहुत सारे bold traders हैं, they can definitely take advantage of it, maybe they'll be more successful। Like Shiv, for instance, if I see the profile, he looks like a bold trader only because he looks much younger. So I'm sure opinions will be different. My opinion is coming from experience and old. So I am only old trader, not a bold old trader, sir. Yeah, thank you, sir. So now can I ask who Abhishek? Abhishek, you are there? No. GN over, then Sid. Sid is there. Yeah. Sid? Okay. Sid is not
Hello.
there. Yes, Sid, please go ahead.
Yes, sir. Thank you for organizing the talk. My question to everyone on the panel is, yeah, there is this last 6 months, 4 to 6 months, that we are seeing a downward movement of the index, which is 10 to 15%. But major stocks have gone more, even gone 30. Good stocks, like DVs has gone more than 30% from ATH. So my question is ki there was till last October or till Diwali also people are saying ki we should hold, people are holding growth assets, but now people have moved to value assets where FII holding is low like that. So if tomorrow market falls to the levels that Vijay sir is saying, like 13, 14,000 or something, then will the attraction come back to the high PE stocks or high FII holding stocks, or we should keep holding the uh, ugly ducklings as Vijay sir says?
Yeah. Anish, would you like to take the question? Anish? I will anyway answer, but okay, Anish probably not there. Okay, see, it's like this. I explained
Yeah,
that.
we are.
Yeah, Anish, would you like to respond? I'll be nice.
Yeah. So sorry, I missed the last part of what you said, Sid. That should you continue to hold on to the?
So, sir, my question is, there are a lot of good high growth stocks like DV's Lab and high FII holdings have reduced substantially, 30%. Some have got
Yeah.
even more than that. But after last Diwali, people have said that we should now move to value stocks which are undervalued and under the book, near the book PSU stocks, or near the book,
Yeah.
or low multiple stocks. So if the market falls to the level that Vijay sir is saying, 13,000, 14,000, should I move back to the growth stocks considering the growth stock at a cheap valuation, or continue to holding the known value stocks like PSU or similar?
Okay. Sid, see, everyone's style is different, and every no stock applies a label to itself that today I'm a value stock, today I'm a growth stock, today I'm a momentum stock. It is we through our analysis and through our lens that we view it as such. So my style is to look at a stock and see if it is if it fits into my process and criteria, which is like I said, momentum and trend. If it's showing that, irrespective of, because momentum is a chameleon factor. It includes value, it includes low volatility, it includes quality, it includes size, so it includes all factors, and the rotation keeps happening automatically. Whereas value has not had a very good decade, but it has definitely had a very good year last year. And post the vaccine, a lot of economy sensitive value stocks have done extremely well. And now we know why, because of the huge commodity boom. Now, when and how you should shift from value to growth, I think uh, is anybody's guess. I don't think I'm equipped to answer that, because I will look towards the market to give me the answer, versus me trying to put my view on the market.
Yeah, I agree with Anish. He mirrors my thoughts, Sid. So, uh, we first of all, we don't know whether it'll come to whatever numbers I'm thinking. It's just a hypothesis based on past about the history. So let us see at that point of time, because right now I am extremely cautious. I would like to take it almost week to week, but I'm saying month to month. And something new may come about at that point of time. We really don't know what a new sector may come out, a new company may come out, a new technology may come which will attract some companies. So I would keep my fingers crossed, watch carefully with a hawk's eye, and take it month by month. Right now, I'm in a mood of protecting myself or my capital, you may say. I'm holding stocks. I'm still holding stocks. It is just that I'm not putting extra money into any stock. So we will see as we go along. Right now, I mirror whatever my thoughts are mirrored by what Anish says.
Thank you, sir. So
Thanks.
one more question
Yeah.
to Anish sir.
Sure.
Anish sir, you said that your system gave you are a systems investor, and your system gave you an exit around September, October, that range. So can you tell us the parameters that gave you such a good call, and what are the, because it's a very big call,
No,
considering
no,
market
it
moves.
did no, no, it didn't give me an exit. It started giving me more exits than entries. So we were getting fewer and fewer entries than we were getting exits. It's only now that in January to February that we've started getting only exits and no entries. So it's
So
a
what are the parameters you have said that it gave this kind of signal?
so more than the parameter of the system, I think you should look at the philosophy. So I've written I've co-authored a paper called Long Factors. No, it's no short change. It's available on SSRN. If possible, I'll try and put the link here. And I think if you read that paper, it's written in a very we've tried to make it simple for people like yourselves to understand how that works. So I'll try and put the link here. If you read that paper, Sid, I think you'll get a fairly good idea of what the system is.
Thank you, sir. I myself am a quant researcher, so I'll definitely look into your paper. Thank you, sir.
Sure. Thanks a lot, sir.
Yeah. I think now we come to Manjunatha. Manjunatha, are you there?
Hello.
Yeah, Manjunatha, please tell me.
Yeah. I wanted to ask if the Indian economy goes into stagflation, then does it make sense to invest in equity? Because the Japanese economy has been in stagnation since 30 years and Nikkei has either gone down or it has gone sideways. So, will the same thing happen in India?
Okay. I think Japanese more in deflation rather than stagflation. Stagflation, we had the stagflation in 90s, so we never went anywhere as far as equity markets are concerned. The first 10 years of my trading life was spent in a stagflationary environment. So stagflationary environment is quite, it's a corrosive environment. Nothing works, but then you have to grin and bear it. I know where you are coming from. I don't want to make dire predictions. All I'm saying right now is I probably I'm one of the rare guys who's talking of stagflation anyway, and we've been talking it from last August. Uh, so if whatever I am thinking is correct and whatever your question is, that if this thing happens, stagflation and continues, certainly equity will be challenged. There is no doubt about it. Investing in equities will be challenged as it has happened in the past. So I don't want to give a clarion call saying never invest in equity or run away from equity, sell everything, because in stagflation that is what probably will happen. That equities will not move for months together or maybe even years together. Let us hope it is not going to continue for long term. Stagflation breaks off. It is not that stagflation continues for decades or something. So let's take it a month by month, Manjunatha, rather than making some bold predictions what will happen. Right now, it is I won't invest till April first week. That's how I'm looking at it. I have very strong
Yeah.
reasons for that.
Just with your permission, I've put
Yeah,
in the
yeah,
link
Anish,
on
please
top.
say I made you moderator also for that.
Okay, thanks. No,
Yeah,
thanks.
yeah.
Said you can just see the paper there. I've put it up there. Thanks.
Thank
Yeah,
you.
very
Thank you
good.
so much.
Yeah, fantastic, fantastic. Thanks. See, this is what I look forward. Somebody coming and helping us. Otherwise, only me speaking is like an echo chamber. So, Abhishek, you got up finally.
Yes. sir. Yes, sir.
Abhishek? Ah.
I was on listening mode all this
Okay.
while.
No, I was constantly calling you.
I know, I was, but then ಇದು ವಾಲ್ಯೂಮ್ ಭಾಳ ಕಮ್ಮಿ ಇತ್ರಿ ಫೋನ್ ದಾಗ
ಆಯ್ತಾಯ್ತು.
ಬ್ಯಾಟ್ರಿ ಕಮ್ಮಿ
Yeah,
ಇತ್ತಂತ
ಈಗಿದೆಯಲ್ಲ ವಾಲ್ಯೂಮ್ ಇದೆಲ್ವಾ?
ಯಾ ಯಾ
ಆಯ್ತು
ನವ್
ಸರ್.
ಇಟ್ಸ್ ಕರೆಕ್ಟ್ ನವ್ ಇಟ್ಸ್
Yeah,
ಕರೆಕ್ಟ್
yeah.
ಎಸ್ ಎಸ್
ಹೇಳಿ ಸರ್.
ಸೊ ಇವಾಗ
ಜ್ಞಾನೋದಯ
ವಾಟ್
ಮಾಡಿ
ಇಸ್ ದ
ನಮಗೆ.
ಕನ್ಕ್ಲೂಷನ್ ವೇರ್ ಇಸ್ ದ ಬಾಟಮ್ 12,000 10,000
Arey Baba, this is the third time I'm repeating. 15,000 for 20%, 14,000 for 25%, 13,000 for 13,000 for 30%. So in my
सर बट
uh,
बेर्स जोश में आ गए आजकल
अरे बेयर्स तो जोश में रहते हैं यार, तो क्या हुआ? बुल्स में भी आए, बुल्स भी आएंगे ना। अब ऐसा कैसे हो सकता है सिर्फ बेयर्स ही जोश में हो? आजकल
नहीं
तो जमाना चल रहा है, बट यू नेवर नो, नो नया जमाना भी आएगा माय फ्रेंड.
yes absolutely so April 1st is when you were saying कि you will try to see look for investing
No, I am only saying I'll review it.
review it yes
हम तो
yes
कुछ नहीं किया. See, right now I am a old trader who is a scared trader. So I am just waiting. Every day I am there in the market anyway trading. So
yes absolutely
if, for instance, I feel something has changed, and then I will jump into the other camp. Right now I'm in this camp. I'm in your camp, or you are in my camp. Whatever.
correct correct
So that's we'll see. But right now I don't want to take this. They say no. Narasimha Rao used to say, taking no decision itself is a decision. So that's exactly what I'm doing.
just like having no position is the best position in the market
Yeah, then that's true. That's true. That's true. Or
Like
they say zero
cash
is
is
better
also
than.
opposition. Yeah, cash
Which
is
one?
also opposition.
Cash. That's precisely, Anish.
Yeah.
I was telling people. People say, no, if I sell some shares, what should I do? Then I said zero is better than negative. No, if you feel strongly that market will come down or your stock will come down, sell it and keep it in. Even you keep it in a let's say a current account, you will get zero interest, no problem. But negative, why would you want to take an asset which will give you negative returns when you strongly feel that that asset will not perform or it may come down 10% and all that. That, that is
sir one thing as we speak now nifty is already down 150 points around 16,100 but it's already there.
Arey Baba, let's enjoy our weekend. Why are you looking at
Arey,
that?
no, I just wanted to take to you that similarity which I was showing to you the other day. March of
That's, see,
2020.
I'm coming to your town. I'm coming to your town. My son-in-law has made a movie, so
Yes,
there
sir.
is a premiere. Let me watch it. I'm looking forward to that. Uh, let me enjoy my weekend. Yeah, yeah. Yeah, Anish, you want
You
to
know,
say something?
on a lighter note, I'm saying that I forgot who said this a long time ago. He's saying people who try to catch bottom get smelly hands. So
Ah,
keep
that
away.
they will attribute it to Confucius.
Yeah, if you don't know, then Mark Twain or Confucius.
Yeah, Mark Twain
And
and
I don't
Confucius. Yeah.
Confucius,
No,
but
in our quiz competition I used to attend, they used to say any quotation, if you are not sure, say Oscar Wilde, because Oscar Wilde comes up with this funny, very witty
yeah, yeah.
quotations. So we used to always say Oscar Wilde when we attended those quizzes. So invariably we got it right. So that is that. Suman, would you like to say something?
Yeah, hello. Am I audible?
Yeah, you are audible, Suman.
Oh, okay. Yeah, actually, what I want to tell, like today, there are a lot of noise, but at the end of the day, charts actually tell something, which actually we do understand if we can read the chart. Where we find in Nifty, it is kind of giving head and shoulder breakdown, and the neck level has also been broken. If a daily chart, if you see that. And at the same time, if you see the gold chart for the monthly chart, you will find a cup and handle kind of shape, which may give a breakout at any point in time. Now, when this is a typical situation, when the equity is not going to do well, at least for next probably 1 or 2 quarter for sure, even the fundamental reasoning, the geopolitical situation or whatever, even if the war stops, after that the effect immediately the sanctions is not going to go out, right? So they will be having a few 1 or 2 quarter effect at least after that. Even the Fed hike is already there on the card, so that will again go. So I believe this is the year when we should protect the profit that what we have earned last year. because in last year, if you leave aside the COVID low from 12,000 level, Nifty has gone to 18,000 level. So there was 50% jump in the mark indices, right? So if you see the long-term average, which is 15%, if a particular year gives 50%, at least the follow-up year there will be some sort of subdued things. So I believe like if we can protect the money which we have won last year, as a retail investor, we would have done a great thing this year. So that's why probably some cash is needed. And right now, it is not the market to invest in. At least wait for 1 or 2 quarter after that. See, if we do not, if we are not able to find the bottom, then no problem. Now there will be something called rounding bottom. So when this will again go up, we'll catch them. No issue. What's the harm? But we have to protect fast because like we can only survive then only if we can protect the money that we have earned. Otherwise, अगर झेलने की ताकत ही नहीं हो तो कितना भी मैं डाल लूं इक्विटी में, after that if I lose out that, I have to survive at the end of the day for long period. So that's why I believe I actually support your view. In fact, I see that the charts are also saying this, even the fundamental situation is also saying this. So that's what my point is.
Yeah, thanks, Suman. I've also noted this head and shoulder. I didn't want to bring that indicator. I also noted this, a pattern in gold, for instance, purely on price. So two weeks ago, I mentioned that if you want to invest, kindly look at gold bees and the gold ETF and the silver ETF. About 2 or 3 weeks ago is what I mentioned, where you move your stocks and get into the ETFs of precious metals. I noticed that that head and shoulder is there, and head and shoulder is there in mini stocks. And even if head and shoulder perfect patterns are not there, you are having invariably coming to the neckline and sitting, including your Infosys, which is apparently strong, but it's touching the neckline of 1680, 1675 so many times. So I understand what you're saying. I completely appreciate and I empathize with your thoughts, and also your thoughts are mirroring what I'm thinking, or what even Anish is thinking. Of course, Anish's machine is thinking. Our own brain is thinking that clearly we are in some sort of weakness as far as the structure is concerned. Thanks, Suman. Naveen, would you like to say? Yeah. So Suman, you want to say something else? Naveen? Yeah. Yeah. Naveen, go ahead, Naveen.
Hi Vijay sir.
Yeah, hi.
Just wanted to get your thoughts on any alternative investments that you're making in the interim where the markets keep going down, whether any bonds or NCDs look interesting to you.
Yeah, I am basically an equity man, Naveen. When I say equity man, I'm saying the market man. So, what are the opportunities available for me in NSC? I will, for me, precious metals are the place to go. And this is what I've been recommending for quite some time. Actually, last 3 weeks ago is what I actually mentioned. But for the last 1.5 years, I've been asking people to put money into gold and silver. Gold and silver did nothing for last 1.5 year. But I think now their time has come. Purely based on charts, if you look at charts, if you look at geopolitical issues, these are two reasons why I think precious metals will do well, and also the fundamental reasons of central bankers hoarding gold. Why go somewhere else? And I'm really have very little knowledge about the bond market in India, so I'm more. I have an opportunity into gold and silver, so I will go there. That's what I've been recommending. Thanks, Naveen, on that. Vignesh, you're there?
ಹಲೋ ಸರ್, ನಮಸ್ಕಾರ. ಕೇಳಿಸ್ತಾ ಇದೆಯಾ ವಾಯ್ಸ್?
ನಮಸ್ಕಾರ, ಕೇಳಿಸುತ್ತೆ ಸರ್. ಹೇಳಿ ಸರ್.
ಓಕೆ
ಹೇಳಿ
ಓಕೆ
ಸರ್.
ಸರ್, ನಥಿಂಗ್. my observation, what's your take about that very stealth swings that we are seeing every day, like bank nifty up and down moving to 2500 points, nifty if you take the swings, intraday swings, it's around 600 700 points. Such a move, it traps either bears one time and bulls another time, creating such havoc. That trend will it and frequently happening in this kind of bear market? And the second one is, do you expect crude to cross $125?
Okay, let me quickly answer. See, what swings you are seeing is a very typical feature of a characteristic of a bear market. I've seen this so many times since 91. So it doesn't surprise me at all. So long as you have a view that it is a bear market, that you will sell on strength, what I call the SOS method, rather than the BTFD method. You did BTFD for long till October. Now you should do SOS. If you believe in that SOS method, then your life becomes much easier, because then you look for a bounce to sell. Now you can be over smart by saying I will buy on the dip and double long on the I will short on the bounce. When it goes down at support, I'll go double long. I'll make money both ways. And being an old trader, for me, once I stick to view till the technicals tell me differently, I will follow that strategy. Right now, I'm following that SOS strategy. So these bounces are to be sold, is what I believe. However uncomfortable you feel when the prices go up, for instance, they went up this afternoon. I think many people would have panicked when it went up to 16,440 or something like that. So when you're waiting for it based on your own understanding of the charts, you will not feel. You were there, right, on my Telegram channel where I was.
Yes,
I
yes,
actually
yes.
bought. So you know what my thinking was. I bought puts at
Correct.
that level, and now okay, touch wood, we're lucky, and we got it almost at the best level possible. But you can, if you know where you are, then I think your path will be much easier. Not that you'll be always successful. Today I was lucky, but at least I was not scared when it comes there. So that is as far as these swings are there. These swings will get worse as the bear market gets deeper, as it gets time, because more panic will be there, more euphoria will be there, all kinds of mental trauma will reflect in the prices when you press F2 and F1 in quick succession. So that is a typical characteristic of a bear market. The second question, as usual, I forgot, because what was
Sorry,
that?
crude. Are you
Crude,
seeing that?
crude. Now,
What?
see, I was mentioning this quite some time back, that there are the gamma squeeze, which I talked about, that between 75 and 125 there are positions. So I thought it may go up to 115, because you see, somewhere along the line, I thought the people who buy the calls will get greedy and they will overdo it, and then it will fall off. Is what I thought. So at that time it was up some 85. So from 80 or something, sorry, 78 or something. So 75 to 125, I knew based on whatever reports I had read about. So the gamma squeeze can be quite terrible. So it is working out now. There is also Ukraine war. When I talked of the gamma squeeze, there was no Ukraine problem actually. It about around budget time, I suppose. Now added with this, I don't know. I mean, I don't want to speculate where it will go, and I hope it will not go up. But hope is not a strategy, right? So I don't know. It can go anywhere, Vignesh.
Yeah.
So I don't trade crude, but I'm very scared that this if it goes up, then we will have problem of fiscal deficit. We will end up paying more the price for petrol. Not good for us, right? But it can
And
go. Hmm.
yeah, and one more last question, sir. So all these geopolitical issue with regard to particularly on Ukraine-Russia war, do you think that it has been already discounted and market is not much caring about this every day-to-day war matters, and it is
Yeah,
taking its
I
own?
mentioned this in the beginning, Vignesh. Maybe you missed it. See, there are two things to it. One is the kinetic war, the war where people bombing and all. So people are getting excited or getting depressed when they hear, excited when they see talks are announced, depressed when a nuclear reactor is being bombed. So that is one part. But my focus has not been on that. My focus has been on the economic aspect. So what are the sanctions? Now I know I was mentioned that America is a top five trade partner in terms of volume with Russia. So America doesn't use oil of Russia, neither do they use the gas of Russia. They use 1% or something. So what are they doing with the 99%? What is that which is there? So these all the commercial entities, right from your Netflix to your McDonald's to automobiles to so many things, there is a trade going on. Now one has to identify what those are, including software. I was mentioning that Infosys has got a base in Russia. So with sanctions being put by America, so all those US related entities are moving out. So which means, there will be some shocks in the corporate balance sheets, and so that is going to affect the markets more than the war is there. I'm not discounting it or not trivializing it in that manner. For me, if you are having sanctions for an extended period of time, everybody suffers. A trade partner, both of two people are there in the trade as a trade. In a trade, you do have a both buyer and seller. So if Russia, you're going, who is a seller, is going to put sanctions. As a buyer, where are you going to get your product? That I think people are not looking at it. And I think the smart guys, I think the FIs, in my opinion, are the smart guys here, and they know about it, and they are selling relentlessly. So I would like to be with the smart guys. I am not a smart guy myself, but I would like to be with the smart guys. So I think look at the economic part of it. Don't look at the war part of it. War part of it is only adding to the confusion, not the other
Yeah,
stuff.
yeah, that's what. The more and more they are speaking about the sanctions, I could see that Europe and US markets are bleeding. Somehow they are showing the strength and recovering some mode, and suddenly that some NATO chief will come and EU spokesperson will come or US will come, UNSC something will happen.
Yeah.
Hearing that news, suddenly that implications that market will started to bleed. Morning it was in positive, now everything is in red. So that's what how that.
Yeah, but yeah, you don't look at the trees, miss the wood for it, right?
Okay, yeah, yeah.
You look at overall. Don't look at the trees. If you
Okay.
that will happen. See, it cannot be that markets will go one direction. No, it never happened that way.
Yes,
Neither in bull
yes.
market nor in bear market for an extended period. Okay,
Got it,
thank you,
sir.
please.
Yeah, thank
Yeah,
you.
yeah,
ನಾನು ಲೇಟಾಗಿ ಜಾಯ್ನ್ ಆದ ಅದಕ್ಕೋಸ್ಕರ
yeah, yeah. I
ಅಷ್ಟೇ.
know. No, no, no
Thank you.
problem, no problem.
Thank
Vishi,
Thanks,
Vishi,
team.
Arunachalam, and Sandeep, and we close.
Yeah,
Yeah,
thanks, Vijay sir. Thanks for arranging this session. Very
yeah.
informative.
Thanks, Vishi.
So let me.
Hi.
Yeah, Sandeep, just hold on, Sandeep.
Oh, sorry.
Vishi,
Yeah.
yeah,
Yeah.
yeah. I'll come to you.
Okay.
Yeah, Vishi.
My question was like now I was looking at my portfolio, and my portfolio was all majority of them were blue chip, and it is decayed by more than 23%, and that was the threshold. Now, like, is it a good time? All that I wanted to know was, is it a good time to accumulate, or like, should I exit the market? Now it's in a sort of, I never expected the market will tank so low, and so now, like, is it a good time to accumulate more of these, or like, so wanted a thought on this.
Yeah, I've repeated this quite some time. I am not willing to take a chance because I believe the worst is not over. I think the worst is beginning. This is my personal perception based on data, and I expect index to be between 13,000 and 15,000 by the end of the year. So right now we are sitting at some 16,000 and odd. So that will reflect in the stock prices of non-index stocks also. For instance, the small cap index is still sitting at June levels or something like that. It is, I think, just small cap index went up 4 times from 3,000 to 12,000. Now it's sitting at some 10,500. I won't be surprised if the small cap index generally it will fall more than the mainline index. So I won't be surprised if it comes to 6,000, which is 3 and 12 is 9, 4.5. So about 7,500 certainly, and maybe about 6,000. I don't think I mean it will surprise me at all. So I feel a lot of stocks have got a long distance to go. Unfortunately, they may be good companies. They're doing very well right now, but I think in the future they'll struggle because of this inflation. So it's very difficult to take a loss. It's very difficult to take a profit also. It's very difficult to sell. But it all depends on your mental makeup. If you say no, I'll wait because it's always comes back after 3 years, 4 years, then you should wait. Otherwise, I think you should bite the bullet. I am not an advisor. This is what I am doing. I have trimmed my positions. I am not buying anything till next month, and I'll review every month henceforth. I don't mind missing the first 5 to 10% of a new bull market, but right now I feel there is still a 20% drop waiting for us in the next few months. So that's it, Vishy. I am not able to give you very encouraging news, but that's what it is. Arunachalam sir. Arunachalam sir.
Good evening, sir. Good evening, sir.
Good evening, sir. A
Yeah,
long time.
yeah, yeah. No, got into some work and other things. Sir. No problem. Sir, last few months we are discussing that HDFC group was in a very bad shape. Now. My doubt is whether ICICI and Bajaj Twins, everybody will join this party. Now, cement sector is also cracking really now. All cement sector is in 52-week low. How do you see these other groups joining the party? Because charts are not yet confirmed. Only HDFC is cracking, still more to go HDFC.
Yeah,
What do you
I know. Yeah, I know, Arunachalam sir. I've seen the charts of ICICI Bank. It looks the strongest, for instance, but Kotak is not that strong. Kotak is weak. The structure. See, if my thinking is right, then all of them will crack. Right now, people have not touched that because there is no reason for them to sell because the prices are stable. So it is a virtuous cycle right now. A vicious cycle can start tomorrow if it gaps down suddenly. It happened to this. Infosys, it went up like a rocket and it suddenly fell 15%. So a time may come for these also, I feel, because my, what shall I say, um, assessment of the index is much lower than what we are today. Somewhere around 14,000 is what I think it will be. And between somewhere between 13 and 15. So they also should crack because of they are part of the index, because the index ETFs, if they sell, all of them also will get sold. So I don't have very positive or very encouraging news on that. On index stocks, I expect, unfortunately for a lot of us who are holding those stocks, maybe we have to suffer the pain for at least 6 to 8 months from now. This is what I think, Arunachal sir.
Sure, sir.
Yeah, thanks. Sandeep. Okay. Yeah, sir.
Hi.
Yeah. Hi.
Hey, thanks for getting me in. Actually, this question is for Anish if
Yeah.
he's still around.
Yeah, he's
Uh,
around. He's around. He's a moderator. He can't run away.
okay, great.
Yeah.
So I guess
Yeah.
we all knew, Vijay, we know your way. You are like a perma bear for some time.
No, I'm not a perma bear. Oh, hello.
Vijay, where we
Hello.
got now?
I hold
Okay,
ITC, my friend. I hold S Bank.
let me not digress and ask my
Ah,
question.
yeah.
So just as a background, I'm a intraday trader and trading for some time, and practically have zero exposures to equity outside my trading portfolio, and I'm not able to build that. Given I have been very scared of the valuations on the Indian equities, and given that market is now correcting, what maybe say a view from Anish, given that he runs his own PMS. So what may be his advice for a person like me who has zero or very little exposure to equities to build the equities here, especially in an environment as Vijay is saying that it might fall, but then you don't know, the market might turn tomorrow and touch all time high by end of year or whatever. But basically, the future is unknown. We know long term trajectory of equity markets to give return higher than inflation or higher than debt. So, what are the pointers to look at, say building the portfolio, whether it is valuation in form of Nifty P's P ratio or some other ways. I understand SIPs and all that is a good way, but outside of that, if there is a way to time or look at the indicators and see how to get that.
Yeah. Anish?
Yeah. So, Sandeep, yeah, you said that you mentioned that you are doing SIPs and all of that, but so I would say that look at it. We usually tell people to look at things, as one is your core portfolio and one is your satellite portfolio. And in your core, let it be a low cost, diversified passive index portfolio, which you can have your. Now, a few years ago, this was a theoretical exercise. I think today we don't have that excuse. We have Nifty 50, Nifty Next 50, Nifty 100, factor fund.
Anish, I just want to interrupt. Sorry, my question was more on timing rather
I'm
than
coming to that.
instrument. Oh,
I'm
yeah.
coming to that. I'm
Okay.
coming to that. So this is the core part of your portfolio. The satellite part of your portfolio is where you can employ some of these timing and be more opportunistic in that part of the portfolio. And you can use something called tactical asset allocation. Uh, so if you've read about Meb Faber, and if you've read about the dual momentum by Gary Antonacci, those are some of the few popular ones, but there are many other such strategies which are, and let me tell you, they are deceptively simple. They look very simple on paper, but they are extremely hard to execute in real time. Uh, and But if you are able to follow some of those strategies, they use very simple techniques like a 10-month or a 12-month moving average, which Meb Faber uses. Uh, Gary Antonacci uses a 12-month look back period to see where, and compares the return uh, with a liquid fund. And if the return of the index is greater than that of the liquid fund, you stay in the index. If the return of the liquid fund is greater than that of the index, then you sell your index or you sell your asset and get into the index fund, into the liquid fund. So these are they look very simple, but they are quite robust. The simpler they are, the more robust they are. And but they are like, especially in times like this when things are extremely noisy, it can become hard to execute these. So I would say that, have a mix of three kind of these kind of tactical asset allocation strategies. I think that will sort of give you a very, very good framework to sort of do this, and are simple to sort of backtest also, and look at how they've performed in the past. I hope I've answered your question.
Yeah, can you repeat those two or three which you just said? I'll jot it down again. I missed it.
So one is Meb Faber. Meb Meb Faber.
Yeah.
And the other guy is Gary Antonacci. But so you can look up dual momentum, DUAL, dual momentum.
Okay, that is the one which you said, liquid fund versus the index fund.
Yeah. So yeah, he basically looks at three. He looks at index, gold, and the liquid fund. So let's say he'll compare. Say if you're doing Nifty, you compare Nifty return to gold return. If Nifty
Okay.
return for the last 12 months is greater than that of the gold, then you stay in Nifty.
And 12 months generally are calculated end to end period, or it is average monthly returns?
End to end, but it is quite robust even over a 6 to 12 month look back. So if you want, the lower the look back, the more transactions you'll get. The higher, the longer the look back, fewer transactions you'll get. But so you have to sort
And
of
generally monthly rebalance or quarterly rebalance?
monthly rebalance.
Okay, perfect. Okay, great. Now that you've mentioned gold, if you can throw, either you or Vijay or anybody else, throw light on the market view on the gold as well.
I mean, we don't have views. It's just that we are long gold, we are long crude, but we don't. I don't have a view on gold. It has done very little for like Vijay said, very little for the last few months. Bitcoin. There was a narrative that Bitcoin will take gold's place and all of that, but I don't have a view as such. But gold is, if you ask me, if you were to put a gun to my head and ask me, it does show a nice cup and handle waiting to break out. That's what my friend of mine who's a technical analyst and whose opinion
Because
I respect.
I have a fairly decent, like 15% of my portfolio in gold, not because of technical reasons, but more because of the hedge reasons. And fortunately, it is performing quite well because it was bought some time back.
Yeah, and actually, what the Indian Indian value of gold also goes up because of the rupee depreciation, and the dollar index is
Yeah,
if you've seen the
and
last few days
also
has
because
been
of the
touched.
taxation. I bought it when taxation was 4%. Now it is 12%. So it automatically gives a bump up because I'm I'm actually using SGBs to get the gold, which was the actually the question here, whether
Yeah,
that is a good instrument or do you think I should diversify and get into other instruments to get the gold exposure.
that
Currently, I
Sandeep,
have
to be honest,
100% SGB.
yeah, yeah. It honestly really depends on how long you plan to hold. If you plan to hold till maturity, SGB is good. If you sort of plan to get, so maybe you can have a mix of gold bees and
So
SGB. So that,
mine is hold to maturity.
yeah, so then it's best to just do SGB, I think.
Perfect. Thanks a lot, guys, for your time. Appreciate.
Anish is SGB in the sense sovereign gold bond, right?
Sovereign gold bonds. So I'm by the way, please let me give this disclaimer. I'm not an advisor. I'm just giving my personal view. So SGB is gold, sovereign gold bonds. They give you 2.5% interest on that. But I think you can exit them. There is some liquidity available in the secondary market. There is some issue with the taxation if you sell it in the secondary market. So that is something that you should look up. And on the day of maturity, you can sort of the central bank will sort of redeem that paper.
What's your opinion on silver bonds, silver ETF?
So same, like I said, if you're planning to trade it or something, then it's a good vehicle to trade.
No, silver ETF can be traded. No, I don't know about that.
You can like a stock. It's basically a stock, right? It, it's available on the exchange, so you can have a trading strategy around it as you have for stocks.
Yeah, yeah. The last is Sudhir. I think you're new to Clubhouse. Welcome. What's your question? Or if you have got something to say?
Thank you, Vijay sir. Yeah, this is my first session. I hope you hear me.
Yes, yes, we're able to hear you.
Yeah, I know you from the Twitter spaces of Vipin and Sharat sir. I've been hearing your session. You're very good at this. I just wanted to share a view. I don't want to ask any question.
Yeah.
Uh, my view is the Nifty will bottom at the 9,000 to 10,000, somewhere between 9,000 to 10,000.
Okay. Why?
The reason I have two reasons for this. One is the technical analysis, looking at the charts, and another is looking at the geopolitical situation. And I've been in the market since 2002.
Yeah.
Yeah, so
But you look much younger, yeah. Okay.
no,
Your
I'm
DP.
I'm 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 38.
Okay. 38 is young only. Yeah.
Okay. Yeah, I've been in this market since 2002, since I was doing my plus two.
Good.
Yeah. So
Yes.
if you come to the technical part, if you look at the charts, take weekly charts or monthly charts or daily charts, the monthly charts suggest that the correction will be deep because the monthly charts just saying that the correction has just started.
Yeah.
It's not done yet.
Yeah.
It started from January.
Okay. Okay. So you expect, when do you expect this 10,000 is what you're talking about? How long
10,000
do you think?
will come slowly. It won't come in a big way. It might come in a big way, or it will come in a slow way. If you look at daily charts, the Nifty is not leaving any gaps behind. This is a clear bear market situation. It's not leaving any gaps. Whatever gaps it has, it is filling up on a daily basis or in a couple of days, 1 or 2 days. This has been happening since 1 month exactly. It's not leaving any gaps at all. The gaps have
I
been
see.
filled, and this happens only in bear markets.
I see. Yeah, yeah, that's correct. Yeah, yeah, that's true. Let's see. Let's hope that we don't go there. For me, 15,000 itself, I've been trolled enough. So 10,000 means probably they'll find out your address and come to your house.
Now,
So be
the
careful.
reason I'm saying 10,000 is because We were at 12,000 or 12,500 somewhere when we got Corona, 2000 March 2020.
That's correct.
The rally which we are seeing is because of the QE.
Yeah.
I believe this is because of the QE which the Fed has put into the markets. So it's like, is it 2 trillion or more?
Yeah.
Yeah,
3
it's 2
trillion.
trillion or more.
Mm.
You know, when a patient gets an disease, you treat him naturally or you give him some antibiotics, but you don't give him steroids. If you give him steroids, the body gets used to it. That's exactly what Fed has done. It gave so much steroids that the markets have got used to the steroids.
Yeah.
Now the steroids have stopped. So what will the market do?
Yeah.
It will obviously fall. Yeah, it will stop. It will naturally fall. So people are talking about 21,000, 22,000. All I have been hearing you spaces. You are asking to just wait for 1 year, but people don't have patience at all. They can't wait for 1 year. Where will the
Now
market
I'm
go
asking
in
1 month
year?
now. No, I'm not. I'm saying 1 month.
Yeah,
After that,
you
we'll
are
take
saying
it.
1 month, but other people are saying 1 year or something.
Mm.
People can't wait for 1 year. They're thinking the market will go or 20 or 22,000 or 23,000 in 1 year. After that, if they can wait for 1 year, they might enter late, but they won't lose any capital. But if something like 10,000 or 11,000 happens, they lose more than 60% of the capital. People are not ready to wait for that.
Yeah, yeah. I understand. I understand. Yeah, yeah. So anyway, let's hope your prediction does not come true because that will be a big move. So anyway,
Vijayji,
thanks. Yeah,
sorry to
thanks.
interrupt, but I've listened to you
Wait.
the
Hey,
very
just 1 minute,
first day.
Bruce. One minute. Thanks, Sudhir. Yeah, Bruce, please.
Yeah, thank you, sir.
Yeah, yeah,
Okay,
Bruce.
okay.
Go ahead, sir.
So,
Yeah.
when I joined Clubhouse for the first time, I entered the Delhi Investor Association, and you were there speaking, and that I remember very distinctly. For the first day that I joined Clubhouse, I was listening to you. You were the first person I listened to, coincidentally and thankfully. And you were telling about how ITC is a great share, and you have a majority stakeholding in ITC. So
No.
that
I
day,
don't have majority stakeholding in ITC. My majority of my money is in ITC. Please, people may think I own ITC. I own ITC shares. Very little of it.
okay, yeah. So
No.
majority of
I'm
your
just joking. No.
stakeholding,
I'm just
yeah.
joking. Yeah.
So that day I marked ITC. The pointers you told me, I verified, I read, and I put in my money. Like I put it in 209, which went, which is a latest low that ITC have touched, and I'm seeing something unexpected at the. It is moving vice versa to the market, and I'm just here to thank you.
All right. No problem, sir. No problem. Thank you, Bruce. Thank you. Have we completed everybody? There is one more speaker, I thought.
So you still hold the
Latesh
conviction
Narwal.
about it?
Yeah. ITC 2025. Up to 2025, I hold the conviction. Unless
Wonderful.
they are committing fraud and government issues something that no cigarettes will be sold. Other than these two reasons, 2025. I've just waited. I'm planning to buy it after April. I've not bought anything since quite some time, since February. I sold something come dividend and just waiting for it. Some I bought yesterday also, but by and large, mostly in ITC only. Yeah. So
Vijay sir, last one small question,
yeah,
sir.
yeah.
Is it possible that QE will occur in next financial year?
Why not?
Possible.
Why not? Why not? Why not? They may do it, but then it will go to hyperinflation. I don't see now QE probably will not have the same effect as what it happened in the past because now it will be fueling inflation, which is already high. I don't know whether they'll immediately do it, but they may panic sometime. But it may not work the way they're thinking.
So
We have to
because
see
of
that.
the inflation, what I believe.
No. We'll have to see that. I mean, I won't be surprised because you can't cure stupid. You can cure mad people, but there's no hospital where you can cure stupidity, or there are no drugs which you can give for stupidity, which all the central bankers are. I have no hesitation in telling that. So we'll have to see that. Right now, let's take it step by step rather than, what will they do 6 months later, who will come, what will happen. I really don't know beyond my scope of thinking. So I'm going this way. So I think we'll end it with Latesh. I think you're the last and probably the best. So hopefully we'll have something good to hear from you.
Hello, everyone.
Yeah. Hello.
And I just wanted to highlight few points
Yeah.
about the macros and the picture, how it is looking like. Euro USD, this is the currency, cross currency spread, and it is hitting, uh, trying to kiss 2020 COVID lows as of now, and this is breaking structure. So that is indicating, because the euro is a heavyweight in a dollar index, and you can see the dollar index rising like anything. Uh, whether this is over, I think this is beginning a big run in dollar index now, because overall the long term and the structure of this dollar index is looking like this time DXY will stabilize above 100. So that
Okay.
is the risk of.
And you are a trader for 15 years.
Uh, more than that. This is basically a trend of starting from 2000.
Okay. Okay. That's an interesting perspective because I don't think we have talked about DXY till now. I know DXY is very strong. Uh, the more you look at the chart, more depressed you get if you're an equity investor. You are right.
Right, exactly. But this time, if I talk about more, Euro USD chart is pointing and highlighting the same thing. If you draw a trend line of the lows of 2000, you'll see the relationship established, and both are confirming each other.
Yeah, I know a little bit of that, and as I said, I'm quite sick in looking at charts which are again and again telling me that Armageddon is here. I don't want Armageddon to happen to us. So just I take your point. I think it's a very well made point.
Another thing I would like to say is, this is a medium term correction as of now, which is trying to turn into a long term correction. Whether it will turn or not, March will tell us whether it will turn or not. So, if this month is going to be bad, that would surely trigger some long term correction.
Yeah, yeah.
Today, silver as a commodity, despite of dollar index rising, has shown some sort of a steam that it is going to do something this time, along with gold as well.
Okay. Yeah, I think even Anish looks is quite bullish on that. I am been bullish on precious metals. I think that is the place to go, and it is available on the NSE, so one can always invest in precious metals. There's no harm, and it's liquid also. So I think. Thank you, Latesh, for all that. Is there anybody else who wants to ask a question, or shall we close the room? Okay. Can I request Gnanish? Are you there? Would you like to close the room?
Yeah, sir. Yeah, yeah.
Yeah. Do
Thanks
the
for
closing order.
people who.
Yeah. Thanks. Before that, thanks, Anish.
Thanks,
Wonderful.
thanks,
This
Vijay.
one.
Thanks, everyone.
Please keep coming. I'll make you the
Definitely.
moderator again and again. And and Latesh, last but not the least, really you came up with two different perspectives. Thank you very much.
Yes.
And Bruce, really appreciate this one. Thank you. One last person, I think B. Shankar wanted to speak. Just let's see if he comes in. Otherwise, Ganesh, you just close. Yeah, Shankar is there.
Sure, sure, sure.
Yeah.
So just wanted to mention to all of the all people who are there here that Mr. Vijay runs a Telegram channel, and he actually is doing it for us army people who who requested him to help us out. And the name of the channel is Money Magnet, I'll request all of you to, please join it. It'll be worth it, at least for, for, what it is that we have found in the last about a month or so that we have been having the channel. We have suddenly turned profitable, and I think it will help you all also to make a little bit better judgment than what you're doing right now. Thank you.
Yeah. Thanks, Shankar. It's been, armed forces means I'm
Hello.
willing to do something. Yeah, Aniruddha. Yeah, please.
I did not get the Telegram channel name. Please, can you repeat again?
Yeah, it's called Money Magnet. It's run by Shankar and his group. I also
Money
contribute to that. Money Magnet and
Magnet. Magnet.
Magnet. Yeah, I will back channel you. If
Right.
you
Thank
follow
you.
me, I'll back channel you.
I
And
have. I have. I have.
yeah, it's a free channel anyway.
Yeah. Yeah.
A lot of people contribute there. I also contribute there in terms
Thank
of
you.
my.
Thank you so much. I'll receive.
Yeah.
Yeah.
Okay. Danish, kindly do the honors. Thanks
Sure.
once again, everyone who came here. I hope we learned something. Praveen, thank you. Sudhir, Bruce, Aniruddha, Sid, Vinay, Chetan, GNA, Manjunatha, and Shankar. And so let's hope we're meeting anyway next Sunday at 9 o'clock, not 8:30, is what I thought, because most people told me that. So, Ganesh, final words and we close.
Thanks, Vijay sir and Anish. Actually, what a wonderful session again coming to an end. So, hope all the people who are present here enjoyed this session and where they all get an idea, brief idea where the bottom is actually. And there will be always a counter perspective. Some people are bulls and some people are bears. Still, actually, the market will show what exactly it wants to show. It will finally tell the truth. Hope you all enjoyed. Thanks for joining for this long session till 11:25 now. So many people are live here. Again, we are coming on Sunday with Vijay sir. Stay tuned. Good night. Have a great day. Bye bye. Thank you, Vijay sir and Anish.
Thanks. Good night. Good night.